Geopolitical tensions and caution. This is the French tech group, so we watch Dassault Systems. And then Page Group on recruitment. They see now a full-year operating profit coming in well below their previous estimate. 60 million is the current target, below 90 million pounds. Anna?
Yeah, absolutely. So we'll watch anything in the recruitment sector that picks up from that fairly negative statement then from Page Group. That could weigh on some of the recruitment businesses here in Europe. So the futures picture, as Critty has been through, is negative. How will that play out as we get trading started for this Tuesday morning? It did seem as if that futures picture has been evolving a little bit over the last 45 minutes or so. So not necessarily a huge amount of conviction there. We'll see what we get. The opening trades do seem to be negative for Europe. The Stock 600 down by around 0.2%. The DAX down 0.2. The IBEX in Spain down by 0.3%. We don't have the French market open just yet. And of course, we'll once again look to that to give us a sense of whether there is sort of lingering nervousness. I'm sure there is uncertainty around the French political climate and what that means for stocks. We saw that yesterday, that the luxury names, as I mentioned, were under pressure, rightly or wrongly, because they are big global names, not necessarily pegged to the French domestic story. But certainly we saw some selling of those. We saw selling of some French banks. CAC 40 then still taking its time to open up this morning, Critty. But elsewhere we see some muted negativity, certainly in London, a little more so over in Germany.
Let's start with the London story as we wait for some of the volume to pick up in those German markets. Right off the bat, when you look at the sector breakdown here, you are seeing an oil-led downturn when we look at that index contribution story. So BP, Shell, for example, Rio Tinto as well, are all going to be some of your biggest weights on the FTSE 100. But there are a couple of upsides. Excuse me, Rio Tinto is one of the sole commodity outperformers, but BP and Shell certainly dragging the index down, as is some of the banks as well. But you do have the likes of Unilever, for example, and AstraZeneca to the upside on the FTSE 100. But a little bit of a more negative story when it comes to the Stock 600, Tom.
Yeah, yes. And Tom, you were mentioning BP.
Yeah.
Sorry, just picking up on that. You were mentioning BP just earlier, and that stock Joe was as well. That stock down by 3%. It seems that there's a broad sector story there. We do have a little bit of negativity in the oil price, down for a couple of days, in fact. 85.59 is where we trade on Brent. Partly to do with the fact that Beryl, it doesn't seem, whilst it causes devastation to life and to people's homes, doesn't seem to be damaging energy infrastructure in the way that it could have done. But BP is certainly a negative on the energy space this morning.
Yeah, maybe coming through and unwinding some of the pricing around that hurricane as well, given the less forceful impact that, as you've described, on Texas, though Houston remains largely blacked out. In terms of recruitment, that's interesting, isn't it? Look, you flagged this one in terms of Page Group, but you're having a knock-on effect for the likes of Randstad as well. That company, which also deals in recruitment, is currently down 3%, one of the biggest losers across the list so far. Going back to the sector story then, top of the list, basic resources up 0.4%, personal care and products just holding into the gains. But across most of your sectors, you are firmly in red territory. Just two sectors eking out some gains. And as we said, energy down 1.3%. Autos also taking a bit of a hit, down 1%. So we'll see a reflection on the DAX.
And we should also mention this very quickly as the French index is open as well. Of course, a broadly lower story. You are seeing some continued pressure on the banks as well. As in addition to Total, for example, down about 1%. But the outperformers are going to be in luxury. Your LVMHs you're carrying are your sole outperformers, or one of your sole outperformers when it comes to the French index. We're going to dive into more of the details throughout the rest of the show. But let's broaden this out and talk about what that red on the screen could potentially signify, because it comes off the heels of another record on the S&P 500. Morgan Stanley's Mike Wilson, a well-known bear and now bull, talks about the likelihood of a correction. Take a listen.
I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because of the election, but because uncertainty is going to prevail for a lot of different reasons, earnings reasons, election outcome reasons, some of the things you mentioned earlier around tariffs, potentially immigration, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period, and it's going to be choppy.
Joining us now, Matthias Born, Head of Investments and CIO of Equities over at Berenberg. A pleasure to have you on the program. Good morning from London. Walk us through your take on the likelihood of a correction. There have been so many calls for it, at least in the last year, as we see this unstoppable rally, frankly, on both sides of the Atlantic. In your view, what is it going to take to see a 10% correction?
Yeah, good morning. Pleasure to be here today. So likelihood of correction, for sure. Sentiment-wise, markets have been getting maybe a bit on the positive side, especially with the concentration we have in markets like in the US, with the tech names, but also in Europe, a lot of the big names have been driving up markets. So for sure, this could short-term be a risk that some of that bullishness is now fading for a while. Nevertheless, I still see a lot of positives throughout the second half, especially with an economic recovery in Europe, for example.
When it comes to economic recovery, though, how sustainable is it, and how much of it is dependent on the fiscal spend, which may be running out in various parts of Europe? Your take?
Yeah, so I think especially the manufacturing side of the economy, and if you look to Germany, especially Germany was hit quite hard by the downturn in the manufacturing sector, and this has been driven down mainly by, for sure, one side demand, but also by inventory depletions. And this huge inventory depletion that has happened in some sectors over the last year, and especially in the manufacturing sector, is ending now, from my perspective. And therefore, this could be one trigger for the turnaround, that inventories have been depleted. Companies are now starting to reorder again. And also, on the other side, I think demand will come back generally. For sure, interest rates are a big topic and could be a big driver also for an economic impulse over the next couple of quarters. Nevertheless, I think this inventory topic has been a big one over the last year, and this is now ending, and therefore it could serve as a good trigger for the second half, especially in the manufacturing sector, and therefore also in Germany for recovery of the economy. It will not be a big one for sure, but little changes could lead also to earnings upgrades, especially in these sectors, but also in general.
Okay, so a constructive view there in terms of the German equity space, with the inventory story playing out, and then the prospect of further cuts from the ECB. What do you do with France at this point, Matthias? Do you look for opportunities in the equity market, some value, some cheapness, given the sell-off that we've seen, or do you steer clear of France?
I think especially some of the names which are anyway internationally exposed, look to the luxury side. So luxury has an exposure to mid-single-digit percentage points to France, to the French consumer, French economy. So therefore, there's not a huge impact from French elections on that sector. Nevertheless, some of the stocks have suffered, not just because of the French elections, also because of a downturn in the sector in terms of growth rates over the last couple of months and quarters, but also French elections had an impact over the last couple of weeks sentiment-wise. So I think this is a good example where opportunities will arise due to the bad sentiment for French stocks over the last couple of weeks, or the huge volatility we have seen here and there. But also on the industrial side, there are companies which are benefiting from strong trends, like in data center investments, for example, to Schneider Electric as an example. So low exposure to France, huge exposure to some strong trends going forward. So therefore, these are the kind of opportunities I would look at the moment.
Okay, interesting. And on your constructive view, Matthias, to what extent, how much are you pricing in? To what extent is that making an assumption on the level of cuts from the ECB? How many more cuts do you expect to come through from that central bank? And just how much of a catalyst will that be?
Yeah, I think it is a catalyst for not just for the economy midterm, but also for sure for for the huge assets that are parked in money market funds to move and potentially move to equity markets, not just to equity markets, for sure, also to other asset classes. But I think that's that will be for sure a trigger. Yeah, so there will be further cuts, potentially 2 more. So therefore, this could serve as a good trigger for money moving in money market funds to other asset classes over the next couple of months and quarters, and that could be a trigger. And especially in Europe, you have seen now 2 years of outflows. So Europe has been a region where investors have been disappearing. If you look to the flows here to European equity markets over the last 2 years, especially since the Ukraine war started. We've seen outflows overall, but specifically, for example, in small cap funds. And this is another opportunity I see in Europe. Yeah. We see money at one point coming back, flows coming back, and that could trigger also more market breadth in European markets. With the economic recovery I mentioned, we will see, and therefore also flows coming back at one point. This could be a good trigger also for the small cap space in Europe, which has been under pressure for quite a while.
Okay, so if we see another cut from the ECB, then that could, through what it does to money market funds, cause some stocks to gain and also Europe to gain as a result. Matthias, what clues are you looking for from the labour market right now? I ask this because we've had a warning out from one recruitment company here in the UK today, Page Group, and that stock is really under pressure, and it's warned about lower activity levels, in particular in the second half of the year. Now, this is just one business, but it's having a negative impact on other companies in the sector. What is the labour market story for the second half of this year?
Yeah, for sure. I think it's what will happen first usually is that for sure we have been in a downturn in many parts of the European economy. So therefore, and it's not surprising that also over the last couple of quarters and also still now, we will see companies warning on a lower demand, on a difficult environment. I think that's also what we hear from companies. Yeah, companies have been getting a bit more positive on average over the last couple of weeks, from my impression. But nevertheless, we are still in a weak situation in the European economy, and that leads still, I would say, to negative news flows from especially from cyclically oriented companies. Yeah. So what will happen first, usually, when the economy is recovering? Orders will come back. Yeah. If you look to industrial companies, for sure, these are the ones which will see orders improving when the economy improves, and then for sure the labor market is later than that. Yeah, so therefore this will react far later. So the order situation will improve first, and that's basically what I would expect for the second half of this year. So the labor market will be impacted later. Yeah.
Is that going to be inflationary then, Matthias, and stop the ECB from cutting rates? Because labour markets are pretty tight already, and if you say they're going to tighten further from here.
No, I think they don't tighten further. I think right now we are in a more relaxed situation. They will maybe tighten throughout 25, 26 again, yeah, when the economy is starting to improve. Yeah, I don't think that they are that there's a risk right now for the next couple of months or quarters. It's more a risk, I would say, if we go into 25, 26, when the economy is starting to reaccelerate more.
All right, a final question to you in terms of the IPO story. I'm curious how in so many places we are waiting for the capital markets to open up. You've seen early signs of that when it comes to how the private markets are kind of working around it or preparing themselves for that. But it's yet to properly show up in the way that would properly encourage IPOs, deal making, et cetera. Do you have a time frame on that, or horizon, or something you're waiting to see to initiate that?
Also, this happens usually a bit later in the cycle. So therefore, this is unfortunately also a story that is that should be played out in 25, 26 and not now. Yeah. So therefore, this is later in the cycle usually when IPOs are picking up and also M&A is picking up. We see that. You're right. We see markets are starting to open up here and there, also on the M&A side. But coming into full swing in IPO markets and M&A markets. I think takes usually a while for that, especially in Europe. We need flows coming back. We need flows coming back into the small cap part of the market. We need flows coming back in general into European equity markets and the economy improving. So still, for example, manufacturing PMIs are still below 50. So we are still in a kind of recessionary mode in the manufacturing part of Europe. So therefore, we need a further improvement on the economic side and flows coming back. And then the IPO market and other parts will then also pick up again. But this is a 25, 26 story from my point of view. Yeah.
Okay, we of course will have our eye out for that. Matthias Born, CIO Equities of Equities and Head of Investments at Berenberg. Excuse me. We thank you so much for joining the program. A quick check on some of the heavyweights, our sensational six, if we can. I'm putting my Guy Johnson hat again. He's gone, but not forgotten, and back on Monday. We will see a lot of red on the screen though, and a lot of that pressure this morning from the sensational six is coming from Novo Nordisk, actually down over 1% this morning. When we look at ASML or even Ferrari, seeing some moves anywhere between 0.5% and 1% decline. So that kind of risk-off sentiment is indeed going from some of the smaller names all the way to the large caps as well. So let's get a move on, and a check on some of the individual stocks as well. Joe Easton standing by. Joe.
So one place we're also seeing red across the screen, Critty, is in recruitment stocks. You mentioned earlier this warning from Page Group, a softening across the markets, not just the UK, but in Europe and the US, according to the company. They're saying they're seeing fewer interviews being advertised by companies at the moment, and therefore we're seeing an almost 13% drop in that one, and hitting the peers as well, like Hayes, Adecco over in Switzerland, and Randstad in Amsterdam. All of those stocks moving lower following that warning from Page Group today. There's a couple of other corporate updates to bring you as well. One of the big ones was, of course, BP. A 3% decline in that stock is pretty big for a company that size. Now, they are warning around a potential $2 billion charge related to that refinery in Germany, where the value of the fuel that they're making there isn't worth as much as it once was. So therefore looking to book an impairment on that one. But this one down the bottom here, catching my eye, Indivior. This is a drug maker listed in the UK, but soon to move its listing to New York, given that's where it does most of its business. It makes a treatment for opioid addiction, but it's got a warning out today saying that that is not as profitable as it once was, and that is down 31% in London. It's worth around £1.5 billion in terms of the market cap on that one. Then in terms of your French updates, some decent moves in that one as well. Dassault, that one has downgraded the earnings. We had it in stocks to watch. That's the software company saying that some customers are delaying their bookings, partly due to geopolitics. Airbus, we had a monthly order update from them, a little bit of softness, but you remember they did warn on their earnings just a couple of weeks ago. And then down the bottom here, Veralia, a maker of wine bottles of all things. Somebody is drinking less wine. Let me know if you find out who, but that is down 10% following a bit of a profit warning out of Veralia. Lots of red on the French screens this morning. Then there is one M&A story to bring you. This is Exclusive Networks. It's a cybersecurity company, got a takeover bid from private equity. You remember Darktrace in the UK also got a bit of a theme coming into the cybersecurity space. That one's up 7% in Paris today. Then finally, a couple of rating changes. Bank of America downgrading Mercedes. This is a big one. We'll get it up on the screen. There it is. BOFA goes underperform on that one, and we're down 3%. They say some of the high-end cars in China are seeing slowing sales, so they don't like that stock at the moment. They cut that stock, and it's falling significantly today. Finally, Credit Agricole. This one gets an upgrade over at Morgan Stanley. They actually say that the sell-off in French banks is potentially overdone on the geopolitics. Credit Ag actually has a lot of international exposure. They like that one, but we're not seeing too much movement. Down with the rest of the market. Credit Ag gets an upgrade this morning.
Thank you very much, Joe Easton, from our equities team, with a comprehensive rundown of all the stocks on the move. Coming up on the programme, we'll go to the aviation sector. Airbus logs its best monthly deliveries so far this year as the plane maker works to resolve its supply chain issues. More on that and the rest of the sector next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
Was going to keep Rain World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 21 minutes into today's session, and you're seeing selling pressure across European equities. The FTSE 100 just clinging on to, well, flat, essentially, but outperforming the rest of the major indexes across Europe, with the pressure coming through on France. CAC 40 down a full percentage point, but also pressure over in Germany on the DAX, down 0.6. Autos, one of the leading sectors in terms of the sell-off, and that is certainly weighing on the German index. Autos down 1.3%. Construction and technology also taking a hit, as is energy, with BP, one of the biggest underperformers so far. Energy down at 0.9%. Let's switch focus to the aviation sector now, though. Airbus logging its best monthly delivery so far this year as the plane maker works to resolve its supply chain issues and pares back its order backlog. Shares, though, falling, as you can see, 1.5% so far this morning. That may be down to more about the sentiment around French stocks than maybe the corporate story itself. Let's get the details then and bring in Bloomberg's global aviation editorial leader, Benny Carmel, who is standing by for us in Berlin. Benny, Airbus numbers down. Break them down for us. We've got the numbers. I should say the stock is down. We've got the numbers through. Break down the numbers in terms of Airbus and what it tells us about where this business is going forward.
Yeah, so Airbus came out with their monthly numbers for June and also sort of the second quarter. Actually not looking that bad. 67 aircraft over the course of the month. That's their best monthly tally so far in terms of deliveries. And you have to remember, about a week ago, the company really spooked markets with a fairly comprehensive profit warning. They downgraded their delivery target for the year. They downgraded their production target for the A320 crucial aircraft. That's the one we can see taking off there in the background. And really, that took quite a sort of shine off the stock, which had done fairly well so far this year. So 67 aircraft, not looking so bad. The real question is, can they maintain that going into the latter part of the year? We have the Farnborough Air Show coming up in a couple of weeks. That'll be sort of a crucial test to the sentiment in the industry. But so far, you know, coming out of a fairly low rate at the start of the year, doing slightly better now.
So that's the Airbus story. Let's talk about the Boeing story as well. There's a lot going on. There's so many developments overnight. Benny, I'll let you cover whatever you want to start with or whatever angle on Boeing you want to hit.
It really is quite a mixed bag. You know, we came out yesterday morning with the announcement, or Boeing did, with the announcement that they had reached an agreement with the Department of Justice. They will plead guilty to one count of fraud. And obviously that's a huge blemish on this company. They are now, you know, convicted felon, as it were. And the question is, what does that do for their business going forward? There was one story that we put out yesterday looking at sort of the government side of things. Under normal circumstances, doing business with the government would be hard when you're convicted. But obviously this is Boeing that we're talking about, and it's very difficult to take Boeing out of that equation. They are a huge defense contractor. They put people into space. Right now we have 2 astronauts in space who went up there with a Boeing rocket. So you can't just sort of yank that contract. You want to get those people back down again. So really the question is, can they get a workaround? Can they get a waiver? That's something that we'll be watching closely in the next couple of weeks. The defense business is important for Boeing, and is more important now, obviously, now that the civil side of the business is not running as smoothly as it once did.
Benny, a United Airlines Boeing plane lost a wheel yesterday, and you know, this isn't the first time. Losing one might just be unlucky, but losing 2 looks a little more troubling. What do we know about this?
Yeah, so this is eerily similar to the incident that you mentioned happened a couple of weeks ago. They lost a wheel. Same thing happened this time again now. Now, obviously, you know, people might think, oh, here we go again, it's another Boeing plane. But to be fair, this is an out-of-production plane. It's a 757. It's been in the United fleet for a long time. So really, this one is on United, and it's really more of a maintenance rather than a production or a design issue here. But these incidents have gotten a lot of public attention since the start of the year, since that failure on the fuselage of the Alaska Airlines plane. The public really is attuned to these incidents now, however large or small. Obviously, a wheel falling off is sort of a more serious offense than sort of you know, something smaller going wrong on a plane. But you know, the question really is, can the airlines get a grip on maintenance? Can Boeing sort of turn this around? And that's something that we're going to watch very closely in the latter part of the year.
Okay, Bloomberg's global aviation editorial leader, Benny Camel, thank you very much indeed. It would be comical if it wasn't so serious. Now, when you get onto a plane in the US, you have to think about checking in your luggage, whether the in-flight entertainment's going to work, and whether a wheel might drop off.
Right,
it's terrifying.
Yes. So, and there are plenty of visitors to the United States right now, important ones coming into Washington because we have a NATO summit taking place, and that's where our attention goes next. We'll get into a conversation about that. What all the leaders are struggling with domestically, though, Critty, could dominate that conversation.
Yeah, as you said, we'll just go right to it. We look ahead to that key topics for discussion. As Anna was talking about the NATO summit, remember, they are talking about centralizing the institution altogether, potentially even having a station chief in Kyiv to kind of work out some of the weaponization that's going, or weapon support state that's going towards Ukraine, and of course some of the troop movement as well. Again, is this a sign to Trump-proof? We're going to get more of that next. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer. only on Bloomberg. Brought to you by Workday. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is the opening trade. We are 30 minutes into today's session, and you are seeing losses of 0.3% across the European benchmark stock 600, pairing some of the earlier downside with the FTSE 100 turning positive, adding to gains of 0.2%, up 0.2%, currently up 16 points on the FTSE 100. Still pressure coming through, though, on French equities. The CAC down 0.7% on a sector-by-sector basis. Top of the list in terms of the gains. Basic resources eking out gains of 0.4%. Bottom of the list, those autos taking a hit of 1.2%. To the geopolitics now, and NATO leaders meet in Washington, D.C. today with Ukraine and defense spending levels high on the agenda. Joining us now is Sudha David Wilp, Regional Director of the German Marshall Fund based in Berlin. Sudha, to what extent will the domestic concerns of some of these key leaders in NATO undermine the objectives of this summit, or not?
Good morning, Tom. Yeah, NATO has really adapted over the years to handle a variety of security threats. And has even been in so-called out-of-area missions since the end of the Cold War. But I think right now, one of the biggest challenges for NATO is to deal with challenges from within. Of course, European countries are very nervous about the specter of a return of President Trump, who was a real disruptor to NATO. But President Trump also has company in Europe. Prime Minister Orban of Hungary and President Erdogan in Turkey are also very obstinate and don't necessarily encapsulate the democratic ideals that undergird NATO. And of course, we've also seen a rightward shift in Europe in many countries, such as Germany and France. And those far-right parties are not shy about their links to Russia.
How do you then think about the potential impact of a Trump presidency on this organization, given the popularity of some of these right-wing governments here in Europe, and how that would tally with a Trump administration?
Well, President Trump has always preferred to work individually with countries and not necessarily work with multilateral organizations. And that is sort of the spirit of NATO. It's been a successful multilateral organization for 75 years now. That's why leaders are gathering in Washington to celebrate its anniversary. And unity is one of the main things that makes NATO credible. And if President Trump is looking to divide Europe and sort of have countries jockey amongst each other to gain favor with the White House, that could be very detrimental to NATO. And he is, of course, also a very transactional type leader, and he doesn't necessarily see the value of NATO, whereas someone like President Biden and presidents before him thought of NATO as a force multiplier for the United States in terms of foreign policy around the world.
Well, Sudha, in preparation for that possibility of a Trump 2.0, as you laid out, walk us through some of the actual things on the docket in terms of deliberation here. Things like centralizing NATO command a little bit more, having that station chief in Kyiv. Is this actually going to do that job in terms of making sure NATO has that continual flow of not only aid, but operational stability if we do see the U.S. administration change?
So the outgoing Secretary General Jens Stoltenberg has said that support for Ukraine remains NATO's most urgent task. And I think leaders within NATO in Europe are looking for ways to so-called Trump-proof support for Ukraine. So you just mentioned a number of things that NATO is deliberating on. There's also talk of opening up a command structure in Wiesbaden in Germany to work on some of the issues that the compact group that the United States has led to continue funneling support, financial and military support for Ukraine. But, you know, leaders here in Europe have also done their homework, and, you know, 2/3 of NATO members are now meeting the 2% goal of spending on defense of GDP. So I think that has also been very helpful. Europeans are looking, although difficult, to also boost their conventional capabilities should a President Trump return to office.
But in terms of that story, how much of that is dependent on some of the congressional aid as well? We've seen so much of that aid dry up from the states. I understand that where there's a massive move from a lot of these European economies to get to that 2% target, or arguably 3% if you look at certain other countries who are pushing for that. But how much of this is a money story, and how quickly can that money run out? Do we have a time frame on it?
Well, you know, it is definitely a money story, as you say, and 2% is now has become sort of the floor rather than the ceiling. You point out correctly that countries like Poland and Norway will be spending well more than 2%. But I think it's also a matter of will, and it's a matter of trying to pivot economies in Europe more into a war footing economy. Germany is now the second largest contributor for support to Ukraine, but it's also a matter of making sure that its industries are getting the planning that's needed and the commitment that's needed from government so it can continue to churn out armaments not only for Ukraine, but also to stock inventories within Europe so that NATO is also able to defend itself, not just Ukraine, but defend its own borders should NATO enter shaky ground with the advent of a Trump 2.0 administration.
Sudha, good morning. What do you think will be made of the recent performance of President Joe Biden and his attempts to reassure his own party that he's willing to stand, he wants to stand, he's well enough and will stand in November in the election? And I ask this because, of course, it is dominating the domestic news cycle, but also will be of huge relevance to the leaders of other NATO countries.
Certainly, you know, there's a lot of attention and fanfare this week for the NATO celebration. But as you point out, Anna, there is going to be quite an amount of distraction as well. I think the press and others, European leaders, will certainly look to see if President Biden can cut an energetic figure during the week of summits, or the summitry this week, the White House dinner on Wednesday. And also, you know, people are also looking at leaders like Macron, who has emerged very weakened after the French election. So there's a lot of distraction on the periphery of this NATO summit, and not only mentioning, of course, the Republican convention that's going to follow next week, where President Trump will also announce a VP candidate. So lots to celebrate for 75 years of NATO, but at the same time, lots to deliberate on terms of what's the next phase of NATO and how it can overcome challenges for the decades ahead.
And Sudha, what should we expect from the right of European politics in Washington this week? Because there are some parts of that political spectrum that, as you point out, have been very friendly towards Russia. There are other parts, I'm thinking of Meloni, who've taken quite a tough line on Russia and provided support to Ukraine. So what should we expect from the European right?
Well, I think the conservatives in Europe right now are not like a monolithic bloc. Meloni has definitely moderated her stance on a number of issues. She's looked to be constructive with von der Leyen when it comes to curbing migration and also obviously supporting Ukraine with the context of Russia's full-scale invasion. But there are other parties like the AfD in Germany that are certainly far from being moderate. In fact, they're being surveilled by intelligence agencies here. So I think it runs the gambit, and there's also a lot of changes ahead. We don't know what the rightward shift will look like in the European Parliament, and we're still, of course, awaiting what's going to happen in France.
So when we're talking about and I think we started the conversation here, kind of this pushback from Viktor Orban or even from President Erdogan over in Turkey when it comes to being aligned with the messaging coming out of the States and out of broader Europe as well. I'm curious what that actually looks like in terms of the read-through for NATO. And the story that I have in my mind, we talked a little bit about Orban, is specifically Erdogan, I think earlier this week, making the comments that he's looking to increase the cooperation with Russia, China, India, making similar comments as well, going as far as for Erdogan to say he actually wants to work more with the Shanghai Cooperation Organization, which is largely seen as perhaps China's response to NATO as well. What does that do in terms of kind of negotiations within NATO and operations within NATO when you see that kind of pushback?
So, President Macron in 2019 said that NATO was experiencing brain death. And, a few years later with Russia's full-scale invasion of Ukraine, NATO's had a resurgence. 32 members, 2/3 of members meeting the 2% goal of spending on defense. But at the same time, illiberal forces within are making it very difficult for NATO to remain unified. And not just unified when it comes to a revanchist Russia, but you also see that there's this axis between China and Russia that is trying to overturn sort of the rules-based international order as democratic countries talk about the post-war years that have ensured lots of prosperity and stability on both sides of the Atlantic. So NATO members are really going to try to make sure that NATO remains a unified bloc, but it's very difficult when countries within the alliance are looking to, not follow discipline and also make carve-outs for their own countries. So that's going to be the biggest challenge for NATO ahead. And also at the same time, the fact that President Trump is still not convinced that NATO is a good deal for the United States. And if he were to come back into the White House, I think it will be very difficult for NATO moving ahead.
Sudha, thank you very much. Thanks for joining us. Sudha David-Wilk, Regional Director of the German Marshall Fund, looking ahead to that NATO summit, celebrating 75 years. Of course, the UK Prime Minister, newly elected, Sir Keir Starmer, will be there. Meanwhile, back in the UK, Parliament sits for the first time since Labour's landslide victory. We will preview what to expect from the party's first 100 days in office. More on that next. This is Bloomberg.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AfDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, a significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
This is Bloomberg.
Welcome back to the opening trade. We're about 45 minutes into today's session. You are seeing some red across the screen, though. Slight outperformance right here in the UK, higher by 0.3%. But you look at broader Europe, and you are seeing some of the markets slumping a little bit, although pairing the losses we saw at the market open. A lot of that simply has to do with the geopolitical overhang that we have in this region. I want to go there next. French lawmakers preparing to begin negotiations over the next government after the country's inconclusive parliamentary election. Let's get more on the story. Bloomberg's Caroline Conan joins us from Paris. Caroline, walk us through the timeline here. When will we know who the new prime minister will be?
The timeline is very difficult to assess, to be honest. The MEDEF business lobby actually warned yesterday about a lasting institutional chaos. We don't exactly know when we'll find out the name of the next prime minister. At the moment, President Macron has asked Gabriel Attal to stay on. That could be for a few days if we find out who is going to be the candidate of the left wing for this job by the end of this week. At least that's what the left wing is trying to do. They're trying to put forward a name by the end of this week. But that could also be later, after the Olympics, or in between the Olympics and the Paralympics, perhaps in the middle of August, if Gabriel Attal and his government stays on during the Olympics, which start in Paris on July 26th. So a lot of unknowns on how long that's going to take. The camp of Emmanuel Macron, the presidential camp, is obviously betting that the left-wing alliance will explode and the far left of Jean-Luc Mélenchon will leave the group and then end up being isolated in parliament. In that case, we could see a center-left prime minister, perhaps a comeback for former President François Hollande or former Socialist Prime Minister Bernard Cazeneuve, perhaps a Green, Marine Tondelier, the current Green leader, or the Green Senator Yannick Jadot are some names. Some are also talking about a possibility of Republican centrists, such as Xavier Bertrand, the president of the North of France region. So a lot of uncertainty on exactly what color, what majority we're going to see in this next National Assembly. Clearly, it is also the end of the pro-business reform agenda of Emmanuel Macron, because anything that comes out of this will be very fragile and could face votes of no confidence as soon as the next budget at the end of September.
Caroline, what does this all mean in terms of France's standing in Europe when we think about the alignments between different political parties in the EU, within the Commission? How is that all lining up right now?
You know, of course, the National Rally suffered a big setback in those French elections, only 140 seats, when they were expecting more than the majority just a few days ago. So Marine Le Pen's attention and Jordan Bardela's attention is turning to Europe. They waited one day to join the Patriots for Europe, the new group of the Hungarian President Viktor Orban. So Marine Le Pen's National Rally will become the biggest group within join this new EU Parliament group of Orban that will also be joined by Vox of Spain and Matteo Salvini, the junior coalition partner within Giorgia Meloni's government. So a few days and weeks ago, we were actually talking about possibly Meloni and Le Pen forging closer ties together. That's not the case. Meloni is now distancing herself from Marine Le Pen. She has a separate group in the EU Parliament called the ECR, but now Viktor Orban's group is going to become the third alliance in the EU Parliament, and Jordan Bardella obviously will try and weigh on the European policies agenda.
Yeah, the reshaping of the European right, not a monolith. We were hearing from Sudha David Wilp earlier on in the programme. Caroline, thank you very much. Bloomberg's Caroline Conan joining us there from Paris with the latest on French politics. From France to the UK, the new UK Parliament sits today with a fresh cohort of lawmakers following last week's general election. Yesterday, new Chancellor Rachel Reeves vowed to get Britain building again as she unveiled a slew of planning reforms.
Sustained economic growth is the only route to the improved prosperity that our country needs and to improve the living standards of working people. Where previous governments have been unwilling to take the difficult decisions to deliver growth or have waited too long to act, I will not hesitate. Growth was the Labour Party's mission in opposition. It is now our national mission. There is no time to waste.
Let's bring in Bloomberg's UK correspondent Lizzie Burden with details of what we've heard and are yet to hear in this week one for the new Labour government. Lizzie, so the property sector then being called upon to do quite a lot of heavy lifting when it comes to the growth story. What stood out from Reeves to you?
Yeah, indeed, and it's going to be difficult getting all of this building past the newly elected Labour MPs who are going to have to take those plans back to their constituents and say this is going to happen in your backyard. But it's central to gripping the supply side issues that have held back house building in the UK and kept younger and poorer Britons off the housing market, as we've discussed for many years. Look, I think it's evident from that speech from Rachel Reeves, the new Chancellor, and the Prime Minister on Saturday that, as he says, he's restless for change. The landslide majority they won in the election does not reflect the vote split, and so the campaign for 2029 starts now. That's why there are so many policies being announced. For example, we're expecting him to launch this Great British Energy, the public company designed to spur investment in clean energy. We're expecting a new border agency, a task force to advise on a national wealth fund. We're expecting a Treasury task force to drum up private investment focused on Starmer's 5 missions. So lots happening, and evidently they want to show that they're focused on delivering exactly what was in the manifesto so that stability translates into economic growth.
Right, so trying to deliver in a hurry then, Chrissy, because they do have, to Lizzie's point, they do have their eyes on the next election. They've been talking about a decade of renewal. Well, you only get 5 years under the UK system, so you're going to have to win again if you really want to do it for 10 years.
The bar is high for success, and it also comes that make sure that the economy is on the same page, and that requires monetary policy to be on your side. Lizzie, what's on your radar there?
Yeah, well, Keir Starmer could inherit the first rate cut from the Bank of England. You've got economists, investors, I should say, pricing more than a 60% chance of a quarter-point cut in August. Interestingly, economists that I speak to are not really worried about an enormous fiscal loosening at the first budget, which, as I say, comes back to this point that Labour does not want to be delivering surprises up front. They want to be, steady as she goes. But on the point of BOE reserves that was raised during the campaign by Nigel Farage, in particular, whether there be some sort of tiering, and it was backed by Gordon Brown, Rachel Reeves sticking to her guns. She does not want this. She says it could interfere with the transmission of monetary policy through to the real economy. And this is someone who's an ex-BOE economist, so not changing her mind there.
Probably doesn't want to steal one of Farage's policies in week one as well. Probably wouldn't be the look she was going.
Maybe not a great look from the former economist at the BOE. OK, Rachel Reeves with the speech around reform and planning, of course, in terms of trying to build those homes, 1.5 million by the end of the Parliament. Of course, data centres, part of the mix as well, infrastructure, and the rest in terms of what we look ahead to. Lizzie Burden, our UK correspondent with the details. Thank you. Let's take a look at what else is coming up today. 3 p.m. UK time. This is of great importance, of course, for the markets. Jay Powell of the Federal Reserve, that congressional testimony starting 3 p.m. UK time, and it will wrap up at some point tomorrow. So zeroing in on what he has to say. Does he lean in to those bets around a September cut? Markets expecting a 70% chance of that first cut coming in September. 6 p.m. UK time, there's going to be an auction of 3-year notes in the US. These auctions have so far been relatively well received by the markets. We'll see if that maintains that theme today. 8 p.m. UK time, the Euros. It's the semi-final. This one I know Critty's very excited about. France versus Spain. 8 p.m. tonight. Are you going to be watching that, Critty?
Of course,
are you staying up for it? It's a late one for us.
I'm surprised you haven't responded to my invitation yet.
What was the invitation?
To watch the Euros with me. No one will come join me. So
it's late, Chrissy.
I mean, you gotta make the sacrifice when Spain is on the docket.
No, but I've got to stay up late on Wednesday night to watch England. You see, so I can't.
Yeah, we're going to reserve that
energy.
Both. We can't have too much excitement in our week.
We all have our loyalties.
Yeah, absolutely. So those are some of the things on the agenda. Interesting from a market perspective. I was reading on the Markets Live blog. They're talking about Powell, and not to downplay it before it's even started, but suggesting that market pricing, options pricing around the euro shows more expectation of volatility from the CPI data then at the end of the week, Critty, than from Powell. You know, we were hearing from Mark Cudmore earlier on that the risk is that he isn't as dovish as the market expects, because it seems that many in the market do expect him to be dovish.
It's interesting that we're seeing that kind of positioning there, because I also read a story, I believe, by our FX team as well, that talked about, and I promise you I'm going to connect the dots here, that when it looking at European bond futures and positioning as well, the open interest in, of course, French debt is enormous, and enormous by historical standards as well. But I'm curious how much of that changes after we get a little bit more direction from Powell as well. Does the U.S. story suddenly kind of overshadow the European story to some extent, given that the U.S. policy story, the data hasn't actually given that much catalyst to the global bond market?
Paul Donovan, of course, chief economist, global economist at UBS, saying they are already too late in terms of cutting from the Fed. He says they have to cut, they should cut in September, but even if they do cut in September, it would be too late. Would suggest maybe there's more money to flow into US debt. Currently, the 10-year at 4.29. We talk about the euro, the euros. Wait, do you have are we going to put some numbers on the France-Spain game? France should be. I mean, they should be given the game, shouldn't they? Given the political turmoil.
I'm not going to extend myself beyond my area of expertise, which means I'm not going to call the result of Spain.
Here's what I'll say. My loyalty is to Spain, but France has been doing very, very well. And they just played against Portugal, against Ronaldo. I'm a big Ronaldo fan as well. And open invitation for him to join the show, just saying. But
it's getting complicated.
It's getting complicated, but it's something I imagine everyone is going to be watching, at least in Europe.
I have the boring job to bring us back to markets right now, because from the football, I'm not sure I can make a segue, but here's a quick check on some of the stocks that are on the move. This one, Page Group, has a macro read across. This is an interesting story, because this business downgrading expectations in the market for how well it's going to do in the second half of the year. It's about recruitment, and that story is weighing on recruiters. Does this set us up for something more negative around the labour market story in Europe for the rest of this year? Indivior very much on the move, 38% down. This in the biotech, the drug space. BP under pressure, 3.5% lower. Dassault Systèmes also under pressure, falling after a rare profit warning from that business. Overall, Tom, though, stocks are down 0.2%. 0.2%. The outperforms a little.
Yeah, the UK, the FTSE 100 keeping its head above water, up 0.2%, as you say. US futures also in positive territory, looking to build on that 35th record for the S&P yesterday. S&P E-minis up 0.2%. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
U.S. futures heading for another record high as investors wait for Fed Chair Jay Powell to testify on Capitol Hill. The NATO summit begins in Washington today. The event will be overshadowed by domestic turmoil across the alliance, from Biden's candidacy to the results, of course, of the French election. Plus, Bloomberg learns that Boeing is in talks to preserve U.S. defense contracts after pleading guilty to a criminal charge tied to fatal crashes of its 737 MAX jets. So good morning, everyone. Let's take a look at the European markets map. Let's see where they are after another record high on Wall Street. Now, the FTSE's pretty much gaining some 0.3%. Again, we're trying to learn more about the cabinet, some of the positions that Keir Starmer has put in place in the UK and what that will do to the FTSE 250. CAC 40 over in Paris down some 0.4%. Again, there's quite a lot of political wrangling over in France as those non-decisive elections mean that there's going to be some kind of coalition building through the next couple of weeks or months. This is what I was talking about, the S&P futures, so gaining 0.2%. Yesterday was a stellar performance. Once again, an all-time high on Tuesday. Investors on a wait for Fed Jay Powell to try and figure out when that cut is coming. And then European stocks, you can see, practically unchanged. Now, the one thing we're watching out for in terms of political risk is the spread between German and French bonds. You see it peaking higher when some of the polls came out that Marine Le Pen, not fiscally prudent like the current government, we think was going to have a majority, and then that spread widened a little bit yesterday with the left doing quite well, and it's now come down a touch. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. S&P notched up its 35th record high this year. That's as traders gear up for Jay Powell's testimony to U.S. lawmakers and the start of earnings season. Well, let's talk now to Ian Steely, International Chief Investment Officer of Fixed Income at J.P. Morgan Asset Management, and Bloomberg Managing Editor for Markets Today, Christine Aquino. What a treat to have you both. Christine, after also we had another record high on Wall Street, I can't really figure out what's supporting this, if I'm honest.
Yeah, Francine, I mean, it's a lot of hopium, isn't it? But there is just incredible optimism in the U.S. equity market right now for reasons that is really hard to explain by anyone. Even if we see yet another record high, with that comes a lot of nervousness over how long it's going to last, whether that's going to be supported, because a lot of worries over the fact that the concentration of the gains in the S&P 500 increasingly just very dependent on a number of big tech stocks, particularly NVIDIA. So the question really is what's going to happen when the fumes start running out and the economy starts slowing, which we are seeing some evidence of, right?
Ian, what are you seeing in treasuries? And again, if you look at the broader market, what are some of the market forces that play apart from the Fed?
So I guess over the last couple of weeks, we've had quite a decent tug of war between the market's view of what happened post the debate, and we saw obviously yields move higher, and we saw curves steeper, concerns about a sweep. And then obviously, as you said, we had some of the data come in over the last week or so, and actually maybe it's pointing to a little bit of softness. I'm not quite sure I'd go to weakness just yet. But I think from a market standpoint, that's really continues to build this view of the soft landing. It continues to build the view that the Federal Reserve will be able to ease policy later this year, and ultimately the markets seem to like that at the moment.
But you have a lot of chief executives saying, actually, we're running with the narrative that a soft landing is a given. It's not.
I don't think it is a given, but I think actually when you look at what's going on, you're still getting government spending. So that's helpful. That continues to support the economy. And then if you do get just taken off the brake by some of the central banks and a little bit of impetus into the economy that way, then ultimately that's going to at least stop the downtrend. And actually the economy still looks pretty robust at the minute.
The question is, of course, what happens with the unemployment in the U.S. And again, the number is 4.2. They were fine. Ticking up a little bit, but is there at some point, the concern that they lose the narrative of employment and actually that unemployment soars?
Yeah, I mean, that's definitely the concern, isn't it, Francine? Because again, the Fed isn't just concerned about inflation, they're also thinking about the level of employment or unemployment in the economy at the moment. And I think, from the last few labor market prints, what's really been concerning is this gap between some of the household surveys versus the quote-unquote official labor data. There's definitely some discrepancy there. Some of that tends to be a bit more forward-looking than the other pieces of data that we've gotten. And so that's where the concern lies, really, is that some of these kind of more forward-looking indicators starting to, as Ian says, point to a bit of softness in the labor market. The question is, is it softness that the Fed is able to control and therefore engineer a soft landing, or is it the sort of softness that could very quickly turn into something worse, and then the Fed will have to scramble to do more rate cuts than they're anticipating?
Yes. So, when are you expecting the first cut from the Fed?
I think you've got to be anticipating it for September now. And I think, to Christine's point, what the Fed need to do is they need to get ahead of this narrative.
Yeah.
So they've taken rates into restrictive territory. They know they're restrictive. Jerome Powell's been very clear about that. Inflation is now behaving. We'll find out on Thursday if it's going to continue to behave. But what market forecasts are is that Q1 was a bump from an inflation standpoint. We're now back on track to have inflation coming down. If that's the case, they can react and hopefully get in front of this possible weakness in the jobs market.
So I was in Sintra at the ECB forum where there was Jay Powell, a number of other, of course, Mr. Goolsbee as well. And there was a concern that actually inflation picks back up, which is why the narrative, frankly, which was not concerted but felt like from all the major central bankers was, look, let's wait until we have more data. Is it counterintuitive, and does that risk actually creating more problems if they wait too long?
It doesn't. I guess they're still living in the fear that they repeat some of the previous mistakes of previous central bankers, where they don't get it. Yeah, they don't get it under control. But if you actually take a step back and say, we had particularly weak inflation in Q4, we then went accelerated again in Q1, we've come back down again in Q2. Let's just smooth that out. The trend is definitely down. I think there's definitely clear evidence when you look at wages, when you look at other measures, some of the survey data. Prices are falling, inflation's coming down, and it's no good waiting to 2% to start acting. You need to wait before that. And I think a combination of the inflation data we're seeing today, plus the jobs data that seems to be coming out a bit softer, should give them and should embolden them to get moving.
I mean, there's also belief, I think, in the markets, or when you speak to market like chief executives, that as soon as the Fed cuts, something unlocks. That it's like the animal spirits, that M&A is coming back, that IPOs are back. Is that far-fetched?
Well, Fred, I mean, I guess it really depends, right? If we are kind of, again, going back to that soft landing scenario, then, yeah, it could possibly kind of create this animal spirit sort of environment and would give, again, the S&P 500 more momentum to reach yet another record high. And that's certainly the hope amongst the markets. But, yeah, it really just depends on, the reason behind a likely Fed rate cut. Is it because they're trying to kind of engineer just a gradual slowing of the economy, or are they cutting because they see something more worrying that perhaps we among as market participants and observers not necessarily in tune to? And yeah, that's I think what is going to be important from comments from Powell today and in the subsequent weeks and months. That's really what we're going to be looking out for, is that are we headed for something more of a gradual slowdown, or is there something worrying that the Fed is looking at the moment?
You're definitely expecting a more dovish Powell? in his testimony?
Yeah, I think so. I think the data is basically pointing towards that. I think the concern would be that everyone seems to be expecting a dovish Powell in his testimony. So maybe we need to think about that. I think to the point of the cuts, though, and from kind of an activity standpoint, I think they need to be doing more than 25 basis points, though. I don't think just doing the 25 and maybe another 25 and sort of alluding to doing a little bit more is going to help. I do think you need to have that view from a market standpoint that it's more of a cycle and we're going to see rates don't necessarily need to go to zero again, but that we're going to see a gradual path down by 150, 200 basis points. I think that's what the market would really like to be, get a comfort around, I guess, from the Fed.
That'd be almost impossible for them to say, given all of the uncertainty around inflation, all of the uncertainty around the U.S. election and global affairs.
And I think that is also one of the problems at the moment because they do not want to make the same mistake that the ECB made. They do not want to preempt and say we are definitely going to be cutting rates, and then the data kind of comes out and maybe disagrees with them. And I think, if you look back to that ECB meeting and think if they hadn't pre-announced it, would they have actually cut? Probably not. Lagarde might say differently, but I think the Fed don't want to go down that rabbit hole.
How do you game treasuries depending on who wins in the election? It feels like some bets were placed after that debate where Biden performed very poorly. It feels a little bit too soon.
It does feel a bit too soon. I think the trade that's been obviously frustrating a lot of market participants for the last probably 12 months or so has been the steepener. You would expect that if you do get more fiscal spending, if you do get tariffs, if you do get a kind of a cut down on immigration, then ultimately that should be a steeper curve. The problem with that trade is it's very negative carry, and it hasn't really worked. And we've sort of been bouncing around in this negative range, and it's just been painful for participants. For that trade to actually really work, you probably need a combination of the sort of back-end yields moving, but you'd also really need the Fed moving. You need short-end yields to be moving lower. That's really going to when the steepener should work.
So all traders now also political analysts. Of course.
Definitely.
Welcome to 2024. Ian Steely from JP Morgan Asset Management and Bloomberg's MLive's Christina Kino both stay with us. Coming up, the NATO summit begins in Washington today. Eyes will be on Joe Biden as the president tells Democrats to stop the infighting over his re-election campaign. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
The The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, NATO leaders are holding a summit in Washington this week. The three-day event will be overshadowed by domestic turmoil across the alliance, from Biden's candidacy to the results of the French legislative elections. Now, for more on all of this, let's bring in Bloomberg's EMEA News Director, Ros Matheson. Ros, I mean, it's like a microcosm. Good morning, first of all. But NATO is like a microcosm of some of the concerns that these leaders have at home. Will they be able to, put their differences aside and come together on something, or is it going to be kind of campaigning for domestic issues at NATO?
Well, as you say, ideally this NATO summit in the US is a moment for NATO to show that those issues around unity and strength, particularly in light, again, of the missile attack that we saw by Russia on Ukraine just yesterday. What we know is that this meeting is not going to formally invite Ukraine to join NATO. There'll be a bit of wrangling around wording for eventual pathway to joining NATO. But other than that, the focus is really going to come back to these domestic issues. We've got a bunch of leaders coming to this meeting with domestic issues dogging them along the way, and a lot of focus on that, not just for the US president, the host Joe Biden, and the questions around his durability as president and as candidate for the Democrats into the next election, but also Emmanuel Macron, the French president, fresh off this election on the weekend, and a lot of delicate times ahead for him to navigate a new government from various parties at home in France. You've got in Germany the Chancellor Olaf Scholz, his party not having done very well in recent European parliamentary elections. And so he's arguably weakened and distracted also. And we've got a brand new leader in the UK, Keir Starmer, of course, very strong win here for him electorally just recently, but this is his first big moment on the global stage as leader, and he's still in trying to get all his ducks in a row for his new administration in the UK and trying to get started on all these economic and other pledges. So a lot of focus on how they're going to come together in the US, but really also how they're going to be on the phones, no doubt, working all the issues at home at the same time.
But, Ros, it seems that the urgency of the task ahead for these NATO leaders was really also laid out on Monday after a Russian missile struck a children's hospital in Kyiv. What will they be able to achieve as an alliance?
Well, obviously what Ukraine wants is that formal invitation to join NATO, and that's what Volodymyr Zelensky is saying that he hopes comes from that meeting. But it's obvious that that's very unlikely to happen. What we do know is there's a bit of discussion already about wording that would be a little woolly, but would open the way to Ukraine at some point potentially joining NATO, and that's probably about as good as it's going to get for Ukraine at that meeting. There is that caution, obviously, about embracing Ukraine fully into NATO at that point. What are the obligations around collective defense for Ukraine, for example, and what does it mean for further aid for Ukraine? And there's that unease about being bound into things over a long time frame when it comes to Ukraine. But obviously that's not good news for Ukraine when it comes to the war on the ground in the minute. As you say, aside from that attack yesterday, what we're seeing is Russia really stepping it up militarily in the east and the south and making some inroads, slowly, but progressing around some of these key towns in the east, and bit by bit, getting some further ground. And they're not making massive gains, but the longer they hold that territory in Ukraine, the harder it's going to be to get them back out again. And so time is really on the clock here for Zelensky when it comes to Ukraine's future with NATO, but he's not going to get a lot really out of this meeting.
Ros, do we know what NATO allies and European officials actually think of the Biden candidacy?
Well, we know from talking to European officials and sources just in the past week, they're very concerned about the picture in the US electorally. They're concerned about Joe Biden and his health, his age, some of those recent episodes that we've seen, his debate performance, for example, and that here he is hosting this week, and it's going to be a demanding meeting either way. There's going to be a big press conference at the end. There are dinners involved, so late nights. And how does Joe Biden hold up under all of that? And there's a real level of concern going in. So they're going to be watching very closely for all those small moments. Is he coherent throughout? Is he presenting, a strong statesman-like appearance throughout? The kind of microcosm that's deeply uncomfortable for the leader of one of the biggest countries on the planet. But really that narrative again around him is just arcing over everything at the moment. It's certainly going to be something that all the officials are going to be watching and taking note of closely.
Ros, thanks so much. Bloomberg's EMEA News Director, Ros Matheson. Let's get back to Ian Steely, International Chief Investment Officer of Fixed Income at JP Morgan. Asset Management. You have, Ian, thank you so much for sticking around, all the leaders at NATO, and you can see by going through the list who has a good mandate, who is in question in terms of power. I mean, can you just from that decide where you put your investments in terms of bonds? Does Keir Starmer, have a good enough standing to keep investors happy?
I think it's quite interesting, isn't it? Because going over there, Keir Starmer's in a position of strength. He's got a 5-year mandate, and not everyone else in the room is going to have that. I think actually, from a sort of global fixed income standpoint and investment, you do need to take a step back and think what's happening at the domestic level. How are we thinking about it from an inflation, from a growth standpoint? Obviously, deficits, as you mentioned earlier, are really front of mind both in Europe and in the US, and then how the central banks are going to ultimately have to deal with that, because everyone's assuming they're going to be easing policy. Are they going to be able to, if we do see a lot more government spending coming? And that's obviously a bit of a fear for the markets.
So what's your take on gilts? Is it are you waiting for more policies from Labour? Are you waiting for the cabinet to start to work, or does it look like a good opportunity because it's a pretty good house in like a bad neighbourhood?
I think actually, when we look at gilts, probably one of the more attractive government bond markets out there, just due to a valuation standpoint, where do they stack up versus bunds and where do they stack up versus treasuries. I think we've heard from the manifesto from the new government that they're not going to do anything too extraordinary on the deficit side. They've obviously learned from previous experiences over the last couple of years, not looking to repeat that. And I think what I'm going to be quite interested in is trying to figure out what the Bank of England are doing, because we obviously went through a blackout period prior to the election, and then we had the meeting, which they didn't have the press conference at, but it did, it lent to the dovish side. Lots of people talking about August. Does the data come out? Does the inflation data come out and continue to push towards that August cut and let the Bank of England get going? I think that's where I will be focusing on for the next couple of weeks.
So the French elections definitely kept everyone on their toes. Where do you see that German bond and French bond spread going?
I think probably going to stabilise around these levels, and I think what happened over the 2 weekends is you took out some of the fear factor of the extremes in either direction. Ultimately, you're going to have this hung parliament. You're not going to be able to get a lot done on the fiscal side. Obviously, Macron was looking to get that deficit down from around 5.5% towards 5.1, and obviously continue to go lower. Are we going to be able to achieve that now? Question about that. But what that probably means is you do need to have a bit more risk premium. So the 40 to 50 basis points that we saw prior to the snap election announcement, we're probably not going to go back there. But I think that tail risk of the people who are talking north of 100 on a sort of a far right or a far left victory, that also has gone out the window. So, I think we stabilise here. I do think, though, that there are better credits in Europe, places like Spain, where they are being a bit more fiscally prudent.
Okay, interesting. Ian, thank you so much for joining us. Ian Steely there from JP Morgan Asset Management. We'll have plenty more to come. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Authorities
could face bigger challenges next.
It was going to keep
World Cup. This is a three.
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest premieres Monday at 9 a.m. Eastern, only on Bloomberg Television.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, the Hungarian Prime Minister Viktor Orban has met with Chinese President Xi Jinping during an unannounced visit to Beijing. This comes just days after a similar surprise trip to Moscow for talks with Vladimir Putin. Well, EU leaders have sought to distance themselves from Orban's shuttle diplomacy, which comes as Hungary takes over the bloc's rotating presidency. Now, Microsoft has told employees in China that from September, they'll only be able to use iPhones for work. According to an internal memo, the measure is part of a company-wide effort to protect against hackers. Now, Google Play is not available in China, leaving Apple's app stores as the only place Microsoft employees can download mandatory security apps. And Chinese EV maker BYD has signaled a deal with Turkey for a $1 billion factory. Now, the company wants to produce 150,000 electric and hybrid vehicles each year in the plant, which also includes a research and development center. Now, the move could bolster the Chinese automaker's foothold in Europe. While not an EU member, Turkey has a customs deal with the bloc. Now, this is a picture across U.S. futures. Yesterday, we had another record high for a lot of these U.S. companies, actually. Wall Street was higher. Again, investors today await the Federal Reserve Chair Jay Powell's testimony to Congress for clues on the U.S. interest rate outlook. Coming up, United Airlines says another of its Boeing aircraft lost a wheel after takeoff. We'll bring you the story and more from the industry next. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning, everyone. Welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. U.S. futures are heading for another record high as investors wait for Fed Chair Jay Powell to testify on Capitol Hill. The NATO summit begins in Washington today. The event will be overshadowed by domestic turmoil across the alliance, from Biden's candidacy to the results of the French elections. Plus, Bloomberg learns that Boeing is in talks to preserve U.S. defense contracts after pleading guilty to a criminal charge tied to fatal crashes of its 737 MAX jets. United says another of its Boeing aircraft lost a main landing gear wheel on takeoff, a near repeat of an incident in March. So let's now get more on all of this story with Bloomberg's global aviation editor-leader. He is Benny Camel, who's in Berlin for us. So Benny, what's exactly behind this United story?
So this incident was reported yesterday, and it was eerily similar to what we had a couple of weeks ago, as you said, a wheel coming off the landing gear of a United aircraft plane. It was, again, a Boeing plane, but in this case, as was the case in the last incident, you know, it's hard to pin this on Boeing, really. This is a plane that's long been in the United fleet. It's an out-of-production plane. It's a 757. So really a maintenance issue that falls squarely on United rather than sort of on the Boeing side of things. But what it tells you is sort of there's a perception out there that flying has possibly become less safe. There's a sense the number of incidents are on the rise. People are a lot more sort of acutely aware of what's going on around them. We had a report yesterday that the US regulator, the FAA, is demanding inspection of oxygen masks on Boeing aircraft. So these sort of incidents previously might have not been reported that widely and are a lot more sort of in the public sphere now and on people's minds as they board their planes.
So what's the latest on Boeing, Benny?
Well, there was a sort of flurry of announcements yesterday from Boeing. The company said that they would enter a plea deal with the Department of Justice. This followed these two accidents that they had in 2018 and 2019. What this means for Boeing is that they are now a convicted felon, which obviously is a huge blemish on its reputation. And the question, you mentioned it just now in your teaser, is what does that mean for sort of future contracts, particularly on the government side? Normally, if you are convicted, doing business with the government is much harder. And in this case, obviously, we're talking about Boeing. It'll be very difficult to take Boeing out of the equation. They are a huge defense provider. They put people into space. So they will probably see if they can find some sort of workaround, some kind of waiver. That's something we'll be following in the next couple of weeks. And defense obviously has become a very important business for them, always was, but is more crucial now than ever as a civil side, the normal sort of aircraft that we all know that they're, you know, in trouble right now.
And Benny, we also had Airbus numbers. Can you break them down for us?
Sure. So we get the monthly orders and deliveries from both plane makers. Airbus came out with theirs yesterday. It's a closely watched number because it gives you a sense of sort of where they stand in terms of their annual target. And Airbus last week, to remind people, put out a pretty comprehensive profit warning. They downgraded their delivery target for the year. They downgraded a couple of other metrics. So this was a very closely watched number, and it was essentially a fairly good number. They delivered 67 planes last month. and that's their highest tally so far on a monthly basis this year. So it looks like they've got a grip on sort of their supply issues, or at least things are improving and not getting any worse. We'll get the numbers from Boeing later today, and it'll be interesting to see just, are they also improving? Are they heading into the latter part of the year with a slightly sort of more upbeat tone? And what will the divide be between Airbus and Boeing? You've got to remember this was a duopoly essentially, and it's become a more sort of tilted towards Airbus sort of duopoly over the last couple of months. So it'll be interesting to see how that exactly plays out. Will Airbus be able to sort of play its advantage even more?
Benny, thanks so much. Bloomberg's global aviation editorial lead there, Benny Camel. Now, Lamborghini chief executive Stephen Winkleman speaks exclusively with Bloomberg about the luxury's carmaker plan to roll out new models in 2024, including a hybrid twin-turbo V8 model.
We started last year with the Revuelto as our V12 with a plug-in hybrid. Earlier this year, we showcased the Urus SE, and now it will be the third one. So the follow of the Huracan will be completely new, and this is going to be the third car with a plug-in hybrid system, and it has an incredible engine which is revving up to 10,000 RPM. And combined with the battery solution, we are heading at the launch already to 920 horsepower. Something really exciting, and we call it a 40 class. So somebody who is really playing in a different field, much better than all what has been seen so far in this field.
Stefan, I get the hybrids. For supercars, it just makes sense because you get the instant torque of the electric motor, plus the feeling, the vibes, the smell, the sounds, the character of the internal combustion engine. But how do you expect to see these cars resell? Normally if Lambo sells a vehicle for, say, $300,000, it goes on the secondary market for $400,000. Like, they command instantly a premium. But we haven't seen that with, for example, Ferrari's hybrids. They're the first cars that company puts out that actually fall in the aftermarket. So what do you expect for the plug-in hybrids in terms of resale value?
So first of all, you have to keep the promise. The first promise we are making is to be more performing and more sustainable. The second one is that the car always has to be a complete new car in terms of design. These are the two things, so design and performance, including better sustainability. Then, for sure, the big risk is always that you get too excited, that you produce too many cars, and therefore the residuals are going down. This is a mistake which we are not going to do, so we will leverage very much on the length of the order bank and balance accordingly.
Lamborghini chief executive Stephen Winkleman there speaking exclusively to Bloomberg. Now returning to the markets, Morgan Stanley's chief U.S. equity strategist says investors should brace for a potential correction in the S&P 500 in the coming months. Well, Mike Wilson told us where he sees risks in the U.S. markets.
What worries me is that momentum is so strong and people have a lot more exposure to high multiple stocks than they think they do. And if you have an event that's unpredictable, then you could have a real reset on valuation of 10, 15%. Like, I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because of the election, but because uncertainty is going to prevail for a lot of different reasons. Earnings reasons, election outcome reasons, some of the things you mentioned earlier around tariffs, potentially immigration, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period, and it's going to be choppy. Now, we're hoping that's going to create some opportunity, but like right here, valuations to me look very, very unexciting.
And it's a great point, too, on you might be more exposed to tech than you think, especially if you're sitting in the S&P 500, which is, what, 30% tech or so. I do want to actually talk about how all of this rolls into price targets. And typically at this point, I would ask you what your year-end S&P 500 forecast is. But I know that you've backed away from those sorts of calls. And it was interesting. If you take a look at Friday, we got some news from Piper Sandler saying that they're actually going to drop their S&P 500 forecasts, that basically it's bad practice. And when you think about that, I mean, are we starting to see the beginning of the end of these big, bold S&P 500 forecasts?
Well, no. What we do is we rolled forward our forecast 12 months in May, so we took away our year-end target. And look, first thing I would say is S&P targets at a certain time and price is kind of silly. But what I would tell you is that the risk reward from here, we think is lower. Like over the next 4 to 6 months, for the same reason I just mentioned, we have volatility probably picking up in the third quarter. I would say your likelihood of upside between now and year end is very low, much lower than normal. I'd call it 20–25% that markets are higher between now and year end, okay? Specific target, I don't know, but let's say it's down 10% or so. Then we would get interested. Then we'd be interested to say, okay, maybe there's some things happening at the index level. Where the opportunity remains is at the stock level, at the factor level, okay? And in that regard, we still like sort of growth, but not just quality growth, but like, quality in general, large cap, good balance sheets, companies that can deliver on earnings, and that momentum will continue. It's just hard to find companies that are cheap. So if they were to come in 10%, then we would probably get interested again.
Morgan Stanley's chief U.S. equity strategist there, Mike Wilson, speaking on the debut of Bloomberg's Open Interest. Now, coming up, she's 27 years old, has started several companies, and has more than 1 million followers online. We'll be speaking to Grace Beverly, founder of activewear brand Tala, next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back, everyone. Now, the UK Parliament sits today with a fresh cohort of lawmakers following last week's general election. Now, yesterday, the Chancellor, Rachel Reeves, vowed to get Britain building again as she unveiled a slew of planning reforms.
Sustained economic growth is the only route to the improved prosperity that our country needs and to improve the living standards of working people. Where previous governments have been unwilling to take the difficult decisions to deliver growth or have waited too long to act, I will not hesitate. Growth was the Labour Party's mission in opposition. It is now our national mission. There is no time to waste.
That was a new UK Chancellor, Rachel Reeves. Now, my next guest is a top UK entrepreneur. Grace Beverly founded the activewear label Tala, aged 22, and now has more than 1 million followers on social media. Now, according to a recent Bloomberg intelligence report, women's activewear could be a $290 billion market by 2032. And Grace Beverly joins me now. Grace, thank you so much for coming on. I mean, there's quite a lot of excitement. I have a very young and fit newsroom, so there's quite a lot of excitement actually that you were coming on, but there's so many brands at the moment. So how do you really make a difference and kind of, I guess, stand away from the crowd for Tala?
So for us, it's really just been about listening to our customer over and over and over again for the past 5 years. We're all about making problem-solving clothing, and for us, that means multi-way, multi-wear, versatile, flattering. We know that our customer, she wants to buy some flares and not just wear them to the gym or kind of to and from the gym. She wants to be able to wear those same flares to go and see her friends, to brunch, to a Pilates class, whatever it might be. And I think that more and more, especially at the moment, people just want to get more out of their clothing. And so for us, it's really been about understanding how we can directly serve our customer and know that when she is deciding to spend money with us, she is getting a piece that she will wear not only to a lot of different things she does, but also for years.
So Grace, what does that look like? I mean, you've been amazing actually at marketing this, on having the vlog, like you're everywhere, you're a lifestyle, you're a brand. And so do people buy into that, or is it actually, do you spend time looking at how the clothes is resilient and kind of breathable and things like that?
I mean, we spend more time than I care to share on exactly that. We always talk about the fact that we are a team made up hugely of our target customer, and what that means is that we will spend an hour debating the placement of a gusset or how that kind of fits and feels, and for us that's what makes us special. So absolutely we've had great traction online and that's been incredibly exciting, but to me you cannot build a business with repeat custom, which we all know is pretty much the secret to being able to build a lasting business that people kind of know and care about and consume again and again, where it comes to like choosing their clothing. But you cannot purely do that through great marketing. The product has to be the marketing too.
How big do you want to be? And actually, who do you see as your most formidable competitor?
I think for us, it's really, when I look at competitors, I look at the fact that it's not necessarily who else she's buying her clothing from, it's who else is on her Instagram feed. It's who, there is a huge amount of choice nowadays, and what we've really doubled down on is making sure that the service we're giving her and the quality we're giving her is above and beyond, and that's shown in the fact that we're rated higher on Trustpilot than any of our competitors, and for us, a competitor might be, especially with at the moment, purse strings are tighter than ever. It may be that she wants to buy some new makeup this week, but it may also be that she wants to buy us. So we look at it less like this person sells leggings and therefore that's our competitor. We look at it more, how much value can we give to our customers' lives and every day, and for us that's kind of the way we think of competition. As long as we're making sure that our quality is constantly benchmarked highest in the industry, we're happy.
And how do you see the U.S. consumers? How big do you want? Are there any areas actually where you want to grow?
Yes, absolutely. So the US has been a big part of our strategy. That's kind of something that over the past few years, since our last funding round, which was 3 years ago, we spent a lot of time really learning and understanding that US customer. We've had an organic US following from the beginning, which has been incredible because, as we know, the US is a tough place to break. But we've started recently doing a lot more marketing activity over there. We just did an event in LA, and the excitement has been absolutely incredible. So we've been really excited about the traction there.
So in 3-4 years, are you expecting like 20-30% of your sales from the US, or how do you see that changing?
I mean, ideally, that's absolutely the case. I think that for us, though, it's always been about not forgetting our core customer, and we know that the UK is really, really excited about us. I'm really, really keen on making the UK a great place for entrepreneurs, especially female entrepreneurs, to be. And when it comes to athleisure, that also means not just kind of jumping ship and hopping over to the US. We know that our UK customers have been really, really core to the brand. So absolutely, as much as we want to be able to service our US customers, we know that on our home turf, that's also will always be an incredibly exciting opportunity for us.
Are you expecting great things from the new government?
I would love to see a little bit more certainty. The Conservative changed the business tax rates, I think, 26 times during their tenure. So it would be great to see, Labour's promised corporation tax kind of fix. That would be great. I also would love to see a task force on getting more female funding. We know that 2% of venture capital funding goes to women, and actually women co-founders, so businesses with at least one woman co-founder, the VC funding rate went from 14% to 10% last year. So it's actually getting worse. So I'd really love to see a task force put in place in order to actually make sure we're moving in the right direction, because currently we've not been.
Have you heard actually from people inside Labour that that's what they want to focus on? I mean, we have for the first time a female chancellor. I don't know whether that makes a difference or not, but certainly it's good to see.
It's absolutely good to see. I think, obviously it's incredibly early days. We'd been working within the Treasury on actually creating this task force in the past few months, so obviously that's been shaken up. I would love to see that brought into the new government. I think that, we know from the Rose Review that £200 billion could be added to the UK economy if women raised at the same rate as men. We've talked about how much the athleisure market could be, especially within women's athleisure. So we know that women's consumption is incredibly important. Now, it's incredibly important to me that women founders can build those businesses too. So haven't heard about it yet, but very excited to see that movement in the right direction.
And this, Grace, is at what level? Is it angel invest? Is it right at the beginning, or is it actually that women start sometimes companies, but then it's when they need to grow that they have limited access to capital?
So the limited access gets worse and worse as companies grow, but we do know that, for example, with venture capital, which is often early on in a business's kind of life cycle, at least within the kind of seed Series A, Series B, we know that that is at an only 2% rate. We also know that angel investment is a lot lower in women's businesses, and women hold a lot less wealth, and obviously are more likely to invest in a like-for-like kind of a company that they would buy from. So it is across the board, and it's really terrible across the board. It's not when, it's not this kind of like 46, 54 kind of discrepancy. This is a 2% to 98% discrepancy. So in my opinion, this should be an urgent fix. And I also think that this is a huge opportunity because this is a worldwide issue. We've seen that in the US, 2.8% was the highest amount of VC funding that ever went to women founders. So if we can make the UK a great place for women entrepreneurs to be, then this is a huge opportunity for us to get great talent, to get great businesses being built here, to stop a little bit of the drain of the UK businesses going to the US when it comes to venture. We could get, the opposite of that. So I think it would be a great opportunity for us to take.
And Grace, what do you think makes your success? I mean, a lot of time, a lot of viewers will say, Grace Beverly started this at uni. She's kind of like built on it. She's done so much. What's the secret sauce?
I think for me, the secret sauce has definitely been engagement with customers. I think on social media, of course, there's good and bad, but to me, really, you cannot overstate the importance of having that direct feedback with your customer and really listening to them. We can hop on tomorrow or today and say, hey, we're actually creating these running shorts. Do you prefer the inseam to be like this and come out like in the bottom of the double layer, or would you like it to be a little bit shorter? And we can get that live feedback, and we hold that so dear to us, and that is what we've worked on again and again and again. So really our customers have built our business, and I think to me that's definitely been what set us apart.
Grace, thank you so much for joining us today. That was Grace Beverly, the founder of Tala. Now coming up, the relentless AI rally helps TSMC's ADRs hit $1 trillion in market cap. We'll have plenty more on Taiwan Semiconductor next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
ADRs and chipmaker TSMC briefly hit a market cap of $1 trillion on Wall Street overnight, driven by booming demand for AI. Now, this is the picture for Taiwan Semiconductors, 0.7% higher. Well, Bloomberg's Charlotte Yang actually joins us with the very latest. Charlotte, good morning. So could there be further upside from here?
Yeah, so to the more bullish analysts, there's certainly upside, especially with TSMC's high-bay listed shares, which has underperformed its ADRs this year. And the key catalyst everybody's watching is the world's largest contract chip maker's second quarter earnings results, which is scheduled next Thursday. So Morgan Stanley, which has just raised its price target for TSMC earlier this week, is expecting the company to revise up its revenue guidance for this year. And if that happens, this will even confirms the bullish for the AI bulls to say that the rally this year is no bubble because they are backed up by fundamentals and backed up by earnings growth. And so Bloomberg data is now is estimating the chip maker to report a 36% in sales growth for the second quarter on a year-over-year basis, and that will be the fastest quarter since the December quarter of 2022.
So, meanwhile, Microsoft is also ordering staff in China to swap Androids for iPhones. What's behind that move?
Yeah, so Microsoft is telling its staff in China that starting in September, they will only be able to use iPhone devices. And that means effectively cutting off all Android-powered devices from accessing corporate resources. And the reason why they're doing that is part of the efforts, of the company-wide efforts, to improve their security measures. And because a lot of the Android-powered devices cannot access Google Play, which will not be able to access the security apps, which is why they're asking them to use the iPhone devices.
Charlotte, thanks so much. Charlotte Yang there with the very latest on some of these stories. Up next, Bloomberg Brief, Danny Berger and Manoj Krani in New York, and this is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set that agenda.
Powell is in the spotlight. It's day one for the Fed chair as he testifies before lawmakers growing impatient for interest rate cuts. NATO leaders head to Washington for its 75th summit as global election turmoil overshadows its mission to show strength and unity. Finding a path forward, Boeing faces yet another incident while grappling with its guilty plea. Good morning, Manus.
Danny, a very good morning. Book your profits, say Citi. Mike Wilson, 24 hours ago, said these equity markets could have a 10% drawdown in them. A correction is highly likely. Then you look at what Citi are saying. AI exposed equities. There's a risk of a bubble. No shock there that people are going to call that. But when it comes to the flow of money, Goldman Sachs, Rubner over there says, buyers are out of ammo, and I'm on the lookout for outflows in August. That's the next leg of the stool, maybe to come under pressure. We go into earnings season. You got banks hitting the tape on Friday. So again, it's going to be a high bar to beat there. Intel furiously higher this morning, up 4.3%. It was up as much as 6%. You've got TSMC making a $1 trillion valuation. All the chip stocks moved a little bit higher yesterday. Piper Sandler have an interesting note out talking about the size of the GPU business being $400 billion by 2027. So again, there's fuel to the elixir of life within the chip story. Tens, you've got $58 billion worth of 3-year notes coming down the pike. But term premium, go on the term premium. It is back. It's almost on the plimsoll line of zero. So we've rallied in terms of term premium. Is there enough term premium to tempt you in? I put BP in here because they've made an announcement this morning in the United Kingdom that they're going to take a hit of up to $2 billion in terms of their exposure on the refineries in Germany. Stock down 3.39%. I'm excited for earnings season. Good morning, Danny.
You have to wait until Friday, Manus, until earnings season starts in force with the banks kicking off. It is a busy week until then. Today, as we've been mentioning, is the start of Powell's testimony. And I think it takes on more importance than it usually does. Usually the congressional testimony, you hear the same sort of language. But Powell now has another data point, and that is the jobs figure. Unemployment at 4.1%. This is the question. He's talked about the reaction function being really dovish, that should there be cracks in the labor market, that they would act and they would cut. Is this enough? Is he going to acknowledge the weakening in this labor market? Because right now, the summary of economic projections has labor markets coming in, has unemployment falling. And that's not what the trend has been.
I would say these politicians are going to be pretty aggressive. This is going to be the last time that you're going to officially see Powell in front of politicians before the election. They're going to be chomping at the bit to go at him from all sides. This is what Paul Donovan wrote overnight. And he talked about the fact that he's not a PhD, he's not an economist. And Powell has tended to focus more on the issues politicians care about and less on what the independent central bank should worry about. And of course, what you're going to hear here is it's the argument. If you're inflation inflation is lower than Europe. Why are you hanging on? Well, it goes back to the 1970s. They don't want a 1970s redux. If they're data dependent, how reliable is the data? So I think he's going to be salvoed from all sides.
Yeah, I mean, this is a criticism that you hear a lot against Powell, basically saying, look, the man is trained as a lawyer. He's not an economist. One could say the same for Madame Lagarde, potentially, too.
But she's doing a fine job.
But look, he's got a lot of people on his side, and that's why you listen to people like Williams, who takes on an increased importance because they do have that economic background. But the thing is Powell can be as dovish as he wants. We're also going to hear from Bowman today. If there are those hawkish members of the FOMC, especially if we're in election year, does he need to get basically everyone behind a rate cut to say, okay, that's why we moved? Or else does it start to sound political if you don't have everybody on side? And I think that's the risk right now.
Well, the doves are in the ascendance at the moment. They have got, Mary Daly talks about a tipping point. You've got others, Goolsbee also going down that road. So the narrative is shifting behind. He's got a fair wind behind him in terms of the disinflation narrative, and that's what our guests have said over the past couple of days. The disinflation is perhaps a little bit more than we all anticipate.
Right, and Ed Cole of Man Group writes something similar about this, Manus. Yeah. He says a much clearer disinflation trend is now evident in the U.S. To me, that's at odds with the caution that the Fed is still telegraphing. Perhaps that is a precursor to bringing back the hard landing conversation that was so prevalent at the end of 22. Time will tell. Ed joins us now, who is the head of multi-strategy equities at Man Group. Ed, it's always a pleasure to talk with you. And I think that's so prescient ahead of what we're going to hear from Powell, because the doves are louder, but they're not saying it's time yet. So what is the risk of a policy error at this point?
I think policy error is a bit rich. I think that Manus put it well, which is that, you know, there's a degree of caution which is probably warranted to prevent any kind of resurgence in inflation that could bring back the spectre of the 70s. My sense is that, you know, if you're trying to ensure the Fed's independence, that what you have to do is take your mandates extremely seriously. Since November last year, we've started to have a little bit more symmetry in how the Fed talks about its mandate. So we had that kind of pivot at the end of November where it became, where Powell started to talk about policy being restrictive. And it started to be a bit more obvious that they were thinking about those dual mandates in a slightly more symmetrical way. My sense is that we'll continue to hear Fed speakers being a little bit cautious, or Powell in particular, particularly today in front of politicians. But the trend is becoming increasingly clear. For markets, it's fascinating because markets seem what's priced in today. Markets are assured that this is soft landing territory. And, you know, we're going to start asking that question, I think, in coming months about whether soft is really soft or maybe if it's becoming a bit harder.
Oh, Ed, you've upset her now. But the question is whether it's a double soft, and whether then. So we're all assuming it's going to be 25, very symmetrical, 25 before the end of the year. But if that landing does become double soft or even incrementally harder, let's throw one out there before the election. Let's get 50 basis points in and get it away. Or would that be the shock and indicate a panic?
Oh, I don't know. Yeah, I mean, my sense is that would be too much. You'd have to see a precipitous decline in activity data that at the moment is not that obvious. Now, as I say that, I'm conscious that typically what happens before recessions is things look fine, right? I mean, we had that pattern of things in the GFC, as far as I remember. I think the fourth quarter 2007 was 2.5% real growth, and then we dropped off a cliff. So, you know, maybe they'll see something that requires 50. My sense is probably not. My sense is they'll go gently. Okay. I'm pretty bad, to be totally honest, on predicting, well, anything, but in particular, predicting with any accuracy timing of anything. Oh. I think the important thing for markets is the trend and the fundamental data that underpins the trend, and to me, that's quite clear at the moment.
The trend at this moment has been AI, NVIDIA over everything, Ed. I find it interesting, the issues that people are having, trying to get their heads around it, because it is scary when you look at the very thin leadership. Terry Smith over at Fundsmith had an investor letter out that FT got their hands out, and it basically said, we have been underperforming this market because we do not own NVIDIA. And NVIDIA, we have yet to convince ourselves that its outlook is as predictable as we seek. But then he goes on to say, outperformance has been difficult to obtain because we don't own this thing. So as a fund manager, Ed, how do you think about this? The uncomfortableness of just owning and being overweight NVIDIA, but the fact you can't really outperform this market unless you do so.
Yeah, look, defending underperformance is a tricky thing as a fund manager. You have to kind of be a bit honest, but not too honest. I think I would probably offer a slightly different reflection on the opportunity set at the moment. What we do is market neutral, right? So we're in the pure alpha business, which is a job of trying to select securities that can beat other securities and play the spread between the winners and the losers. This has been a phenomenal environment for that. And I would say in the funds that I manage, in the multi-manager hedge funds that I manage, where I'm allocating capital to some really great PMs across Man Group, we've had a really good year. And we've had a good year with minimal or perhaps even zero exposure to NVIDIA. And actually, it's been an environment, a fascinating environment, and something that we suspected might be the case as rates moved higher, is that dispersion in stocks has moved quite a lot higher. So vol's been very low, but dispersion's been quite high, which really means you get rewarded for placing correct bets on winners versus losers. And it's been a much better environment for that than the period during very low interest rates. So I think if you're a stock picker, there's been plenty of opportunity. It's been interesting how that opportunity has been broad-based. We've got value managers who have outperformed. We've got growth managers who have outperformed. It's actually been a good environment. So I'm resistant to the idea that not owning one company can be a determinant of all of your year's returns.
Look, Ed, we've had you on several times, and this conversation seems to be the most understated bull that I've heard you be. And you talk about loosening regimes as being overwhelmingly bullish for equities and bonds. Are you equitably bullish on both? We've seen a steepening in the curve, a phenomenal steepening in the United States of America. I mean, are you latently a roaring bull or just a bull?
No, I'm latently a terrible pessimist, actually. I saved a little caveat in what I sent over to you so that I'd have something more interesting to say. I think the point about our analysis on loosening regimes and curve steepening is, yes, they're overwhelmingly bullish for equities and bonds. This time is different, perhaps. Normally, when central banks cut interest rates, they do it against a backdrop of manifestly obvious weak growth, right? Mm-hmm. So you've typically got weakness in growth. You've probably got weakness in asset prices. You've got that sense of kind of, pushing on a string. Everyone's so despondent. They think, is anything ever going to help if central banks cut interest rates? And then bit by bit, the loosening of financial conditions and monetary policy starts to support activity and the discounting of improved activity. It is a bit different this time. I mean, I'm worried again about a hard landing. As things stand today, there's not enough evidence of that. So what we can tell you about the pricing of rate cuts in Europe or the UK or the US is they're coming against the backdrop of pretty full inflation and activity data that looks okay, if not stellar. That's unusual. And therefore, it may well be that what I suggested about the exceptional rewards for bonds and equities in loosening regimes don't apply in a 2024 loosening regime that might be very different. Okay. My real preference here, to your question about kind of equal confidence, my real sort of preference here is actually bonds. But I'm an equity person. So how do I think about that preference in the equity market? And I think, you gave in your intro, I was worried because I felt like you stole all my thunder, all the things that I think at the moment you cited. But actually, I agree with a lot of the speakers you referenced. I think we're entering a seasonally difficult period for equity markets. I mean, August and September are the only 2 consecutive negative months on average over the last 30 years. Off the back of July, which is on average the best month. We've had like $500 billion of ETF inflow this year. So loads and loads of really bullish things. You already mentioned the bar's high on corporate earnings, and I've said there's plenty of things weakening at the margin, not least some of the consumer data where credit card delinquencies in the US are picking up. And
it's certainly going to be a tough couple of months. Ed, we'd never steal your thunder. We just like the note so much that we just thought we'd sort of put out the big, bold headlines for you there. Ed, Good to have you. An equity manager who's bullish on bonds. You can't beat that with a big stick. Ed, thank you very much. Ed Kohler of Man Group, our guest this morning. Other stories trending on your Bloomberg terminal this morning. This is what we got for you. Shares in BP, as we said to you, have been dropping. The company warns of weaker oil refining and write-downs. BP sees significantly lower refining margins and says it will take up to $2 billion in impairments in the second quarter. Now, that figure includes charges related to the scaling back refining operations in Germany due to the high costs and the declining fuel demand.
Most of Houston remains without power in Tropical Storm Beryl's wake. Authorities warned the blackout may last for days. The storm flooded streets, downed trees, darkened traffic lights, and left power lines on the ground. 3 deaths were linked to the Category 1 hurricane.
President Biden says he's firmly committed to staying in the race, allowing his physician to share health details and quell concerns. Despite calls to drop out, he's won support from some progressives he once battled with. Meanwhile, Wall Street's most influential donors have lost sway over Biden, given his sizable campaign war chest. Context matters on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York. So yet another hiccup for Boeing. United Airlines says one of its Boeing aircrafts lost a wheel while taking off yesterday, and that was nearly identical to another incident that happened in March. Joining us now is Bloomberg's global aviation editorial leader, Benny Camel. Benny, I look forward to a day when we can stop talking about this. And of course, the reason we're talking about this is because it continues to have a black mark on Boeing with every single incident that we hear about. So what's happening with this latest one?
Yes, hi from Berlin. I mean, in all fairness, this is probably more of a black mark on United than it is on Boeing. It's unfortunate that it happened on a Boeing aircraft, but this is a plane that is out of production. It's been in the United fleet for a long time. So this is not something that, would be similar to what we saw in January when we saw this panel blow out of a brand new plane. That was very much on Boeing. In this case, this is more of a maintenance issue that has to do with United. Obviously, it's a serious incident. Luckily, nobody got hurt in this. But, the bigger picture really is that the public, the flying public, regulators, everybody is acutely aware of these incidents. Previously, maybe a year ago, even 6 months ago, people wouldn't have cared much about these things, but now a lot more attention is on each and every one of these, and Boeing is kind of in the firing line, even when they are not directly to be blamed. So that's a difficult narrative for them to get out of, and they're trying to do their best. They've had a dismal first half of the year with everything that's been going on, but these incidents obviously don't help because people will say, oh, it's Boeing again, when in fact it's more on the airlines than on the manufacturer.
Yeah, I mean, the preoccupation is with the cash burn, and now obviously having taken this guilty plea, what will their relationship with the government, will the government be? There's United Airlines down 3.4%. Let's just pivot to Airbus, because it depends what way you read these Airbus numbers. They've come in, they've had their best monthly deliveries of 2024, but does that mask, does that say that they've solved their supply chain issues, or does it simply mask over a bigger issue?
Well, very much the latter, Manus. I mean, this is something that will remain with them, these supply issues, for years to come. The CEO has said as much. We're talking about 2-3 years until this is properly fixed. Remember, they had this pretty dramatic profit warning at the start of last week where they spoke of all the issues with the supplies. It's not a demand story, it's a supply story. Yes, you got the numbers yesterday from Airbus, 67 planes that were delivered in the month of June. That's a good number. It's the highest monthly tally so far this year. So it sort of points in the right direction. But they have a long way to go to meet their even reduced target for the year. Remember, originally the plan was to hand over 800 aircraft this year. Now it's only 770, and they still remain quite a ways away from that at the halfway mark of the year. So good news on the one hand that the direction seems to be right, but still quite a lot of catch-up to be done in the latter part.
Okay, well, it's certainly feeding through to prices. I can tell you that from a very sore experience with my Amex card, which is one flight to Ireland. I can't even name the price. But anyway, there you go. It's called a lack of supply and bums on seats. Benny, thank you very much. Benedict Kammel in Berlin. Let's turn our attention across to retail. It's the attempt to rebuild relationships, the most important part in retail. But this is with the partners. Nike has brought back a retired executive to be the new VP of Marketplace Partners. Joining us now is Charlie Wells. So Nike tried to bolster and build their own shops, but it looks like they do need partners, and they brought back Tom Petty. Who is he, and what magic touch does he have?
Tom Petty is a 30-year veteran of Nike who is tasked with rebuilding those retail relationships. And this reads a little bit like a cautionary tale from an MBA case study, because we know that there's a cyclical trend in retail away from bricks and mortar and towards technology, but it looks like Nike just pivoted too fast into tech, projecting at one point that they could potentially bring in 50% of sales from digital. That never materialized, and they realized they need to rebuild those relationships, and that is what Petty is there for.
It's a difficult time for Nike. The CFO was talking at their last results, saying that they're feeling increasing pressure by the value customer, and they want to give out now a shoe priced below $100 that for Nike would be, relatively cheap. So how do they marry these two things? A brand that is struggling, trying to rebuild retail partners, and at the same time, Charlie, a consumer who is starting to feel some price fatigue.
Look, that $100 price point is something that they had shied away from. And I think a big issue here is going to be innovation. So you can innovate digitally, you can innovate and rebuild relationships with retail partners, but that innovation on product is what is so difficult. It's hard to get the price points right. And look, Nike's core, fundamental principle years ago was athletics first, and then the consumer will follow. So they would innovate on the court, and consumers would follow after that. They sort of missed a trick recently with that. They've come into 2024 without that innovation, and that could hurt them in the long run.
All anybody wants is Adidas Sambas, I'm sad to report. Charlie, thank you so much. Bloomberg's Charlie Wells. We'll have your top headlines next year on Bloomberg Brief.
times in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Kayleigh Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
This is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Time for your front pages. This is what's making news headlines around the world. First up, we have a coalition conundrum in France. You've got Le Figaro leading with this. President Macron, the coalition is not found. Legislative election results prevents an absolute majority. The Left Alliance, far from the mark. Alliance centrists seem inaccessible.
This from the Wall Street Journal, Manis. They're reporting that a Russian missile has struck a children's hospital in Kyiv. At least 33 dead. More than 100 have been injured. President Biden has said that it is critical that the world continues to stand with Ukraine ahead of a NATO summit meeting.
Now, look, it's a story that we've both been tracking quite furiously. The FT leads with their interview with the billionaire David Ellison, Larry Ellison's son. He's got his hands on Paramount, and it is, what is he going to do? I think the title of it is this, Danny. It's going to be a media and tech company. So this is about the investment. Now we begin to understand a little bit about the size and the scale of the investment and what they're going to make Paramount.
And I'm skeptical. How many times have we heard this of media companies trying to become more tech-like, and it doesn't work? I mean, they have Paramount Plus. They've lost billions on this thing.
I mean, he talks about wanting to reduce the churn, use algos to keep you close to the brand. I mean, you could say that it's a pro forma script of what they're going to do.
Yeah.
And they're building studios in the cloud.
I wonder how much they're going to spend, because they cut spending a lot, and that didn't work out for them. So, you know, time will tell whether this time it works.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
DOJ or other authorities
could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From our global headquarters in New York, I'm Danny Berger alongside Manish Cranny. Let's set your agenda.
Powell in the spotlight. It's day one of the Fed chair as he testifies before lawmakers who are growing impatient for interest rate cuts. NATO leaders head to Washington for the 75th summit as global election turmoil overshadows its mission to show strength and unity. Finding a path forward, Boeing faces yet another incident while grappling with its guilty plea.
Somehow, in all this turbulence, no pun intended with the planes there, Manis, 35 all-time highs. Are we going to hit a 36? We're up by 0.25% for your S&P 500 futures. 10-year yield not moving anywhere fast, up by, let's call it a basis point. 4.28% is where we stand. It's the front end that's been under pressure as we gear up for Powell, as we did see some bond buying last week off the back of weaker economic data. Euro, that is very much so calm and settled this morning after European elections, after France over the weekend. But as the dust settles in Europe, Manis, I can't help but wonder if we start to take the cues of the narrative once again of interest rate divergence, especially because we're going to hear from Powell again. How dovish or not dovish will he be? Will he talk about this labor market? Will he talk about 4.1% and the weakening? Or does he just continue to reiterate, as so many speakers have, that we're not there yet?
Yeah, I mean, the narrative around unemployment and the dual mandate, everybody, you know, the furious focus has been on inflation and the disinflation narrative. But as you said earlier, does he genuflect? Does he acknowledge that softening? And what does that mean for the rates market? The rates market at the moment is going for 2 cuts. We just had Ed Cole from Man Group, and he is mildly bullish, and he's got 2 cuts penciled in there. He's more, for an equity manager, he's more bullish on bonds than he is on equities.
I loved when you were like, you're kind of bullish. He's like, I'm a pessimist, man. You have to kind of caveat everything in this weird market where only one stock leads the way. You kind of have to say, yeah, I'm bullish, but I'm pessimistic.
But even on NVIDIA, he said, he's got a minimal exposure, and we can outperform without that. But we can ask our next guest whether she's in the same camp. Speaking of which, our next guest says this about the horizon, and a little bit of context for you. Earnings expectations are fully discounted, and volatility from U.S. election. Potential greater economic slowdown from higher rates and inflation. Geopolitical risks are heightened relative to history. She is Stephanie Gould, the head of investments over at Robinhood. Good to see you this morning.
You too.
From that introduction, my sense is that we are perhaps underestimating the scale of slowdown and the pace of disinflation. It's something we've asked a lot of guests this week. We're going to get CPI, we're going to get Powell. So my question to you is the same as to everybody else. What scale of disinflation are you anticipating, and what scale of slowdown?
I think for a scale of disinflation, you sort of just only talked about the risks. I do actually think there's like a balanced view out there. I think bulls and bears are sort of neck and neck at the moment, and that's because of the tech super cycle on the other side of this. But from an inflation perspective, I do expect it to continue to fall, but be slow. And I think actually Powell acknowledged that a bit in the semi-annual report, which I'm sure he'll address today or tomorrow. That special section on housing, I think that's the thing that's kind of keeping inflation sort of sticky, and he's acknowledging that it takes a long time to kind of show up in the official numbers. And that's what I think will continue to happen. I do think the rate cuts, which I think they'll have one this year, I'm not necessarily on the same side as the market, although a lot of the data that we got last week actually helps. I think that's what moved expectations up. But I think we will get a cut this year, and I do think this kind of a couple of cuts will actually help lower inflation because it will kind of unleash a little bit of demand, I think, on rents, right? I think that will actually help the housing market and sort of cool the rental market.
I find this such an interesting point because, I mean, it's this madness of higher rates haven't really affected the economy as much as we thought.
Because there's so much stimulus.
Well, right, but then in that same camp, is lowering rates going to be as effective? Also, kind of to what you're saying, in terms of reawakening some growth, helping us avoid any hard landing. If, again, it's the stimulus out there that's been aiding the economy, how much more is, 1 basis point, 25 basis points, one cut, 1 basis point would be literally nothing. But how much would that really do to kind of avoid any type of undue weakening in this labor market?
I don't think it's going to do very much. That's why I think they can cut a little bit to acknowledge the fact that inflation is not nearly as high as it was. And I think you saw it with the ECB, right? They cut once. And then you had a note put out saying we're not sure if we're going to cut a lot more. And I think Powell should wait until he can cut a couple of times rather than one and then see how it goes.
How much tolerance is there, though? I mean, the markets have been at loggerheads with the Fed pretty much the whole way through this. I mean, okay, they were brought to heel from 6 cuts to 2 cuts over the past couple of months. How impatient will the politicians be today?
I mean, I think they have to pander. I think they have to show their constituents that they care about them, and it does matter. Interest rates have affected the everyday consumer quite a bit, especially the housing market, right? People cannot buy houses. The housing market has stayed where it is from a price perspective because people have low mortgage rates. I think it's something 2/3 of mortgage rates out there are below 4%, which you can't get today. So I think they're going to have to, ask a lot of questions about this.
So you mentioned earlier that basically some of the oddities of this market have to do with AI leading. But if you look at the rest of the market, there are some pretty boring consumer staples that have done well too. Costco, Walmart, Kimberly-Clark, all of them up more than at least 15%. What does that tell you about the contours of the market? That if we're not buying tech, we're buying safety?
Yeah, I think if you look at outside of the tech space and comm services space, the economy is starting to slow down. The consumer has slowed down. We've seen that, right? In the consumer discretionary space, in the retail sector, a lot of those companies are oh, we're going to put out value menus. We're going to put out ways to give you discounts. Places like Target and Walmart have said the same. So it's showing that they're listening to their customer base, and the consumer is being more discerning about where they're spending their money. I mean, inflation is they are ground zero for inflation.
But then this is the bifurcation in terms of who's hurting the most on higher interest rates and on mortgage rates at that price and inflation, and it is those people perhaps at a different income point relative to the wealth enabler or the wealth holders and the wealth builders. Look, we've got a whole host of notes with Mike Wilson 24 hours ago saying there's a lot of fully valued markets here, 10% drawdown. You got Citi saying book your profits, AI exposed tech. I mean, a 10% drawdown. I'm just sitting reading these notes and I'm thinking, actually, I'd probably welcome a 10% drawdown at this stage because it might just give us a little bit of a draw for breath. And then when the rate cuts come, you have got the opportunity to get into perhaps those higher concentrated areas of the market that are so rich and so expensive at the moment. I'd welcome a 10% drawdown.
I actually think it's very normal. If you look back in history, I think over the last 50 years, something like 36 out of those last 50 years, you've had an average drawdown of more than 10%, even when their markets are up for the year. And that's normal. Volatility has been extremely low, and I think I would welcome some volatility too. Typically, September is the worst month in the year, and so that may be coming. And I actually do think we'll get a little bit of a correction, but I still am pretty positive for the year and for next year.
Okay. Before we let you, what's the one thing that could actually cause that 10% drawdown quickly?
I think it's just expectations being very high.
Okay, we're overpumped. Okay, there you go. Stephanie Guild of Robinhood with her view. It's going to be a tricky September for us. The Turkish Sovereign Wealth Fund is considering a stake sale of over the 26% holding in the country's largest telecommunications operator. I caught up with the CEO to discuss the company's future and the prospect for any IPOs.
Overall, what we are doing is, so actually in the telecommunication industry, we are always going with the tariffs of 12 months. So we are just lagging a little bit behind. So because if you have, like 12 months ago, you have your subscription, so we need to wait for the change on the pricing. So that's the reason that we believe in that we are just going to continue on inflationary pricing. And then at the end of the day, still, if you look at all the inflation, the telecommunication industry is well below the inflation rate. So we have still room to go.
So you still think that there's no sign of a slowdown at all in demand or price pressures?
Yeah, none at all.
As I say, orthodoxy is returning. We're looking at inflation rolling over. Does that mean that the window to IPO some of your business is now seriously open?
Yeah, definitely. So we have we have business in the different, for example, instant messaging app. We have a TV broadcasting app. We have a payment app. So we are looking for all the opportunities, but we are looking for the right time with the right price.
Okay, you've got three major businesses, as I understand, that you want to IPO: the towers business, the broadband business, and the fintech. Which of these is going to be the first and the easiest to get to market?
So actually, we are looking for all the opportunities. So to say the truth, that I'm not going to pick one of those. It's for me, all of them are so valuable. So I'm just going to look into all the opportunities, because currently around the world, the fintech is just also can be a possible option. But also, tower business is also so profitable, and it can be another option as well.
Do you think there's more appetite? If I look at the towers business, typically these will do better. They're much better cash generative, cash flow orientated businesses. So in order of priority, you say you won't pick one particular child that you like the most, but can we expect you to pull the trigger on one of these deals this year? Markets are trading strongly, capital markets are strong. Are you tempted to go this year on one of the businesses?
So again, we need to figure out the perfect timing. So the kind of the inflation rate is going down, and then there's a huge appetite about the investments. So we are looking for we are checking the waters, and then we are going to figure out the best time and the best price. For example, the same thing happened for our Ukraine business. We figured out that we have to get out of the Ukraine, so that's the reason that we sold it to our Ukraine branch. So that's the reason that we are looking for the opportunities.
When you choose the timing, is it going to be an IPO in the Turkish market, or would you consider here in the US? Is there a real possibility the US could be on the table?
Yeah, of course. We are just looking at all the opportunities, but the main IPO is going to be mostly in Turkish markets, but we are looking for if possibilities in here as well.
You're interested in renewables, you're interested in data centers. If I said to you, the transformation or the next evolution for Turkcell under your tenure will be what? If you and I sit down in a couple of years, what is Turkcell going to be?
So actually, a data center business, we are just planning to make it bigger. And currently, I have 4 new next-generation data centers, and then I have more than 4,000 customers, local customers, that I'm providing them cloud services. So I can definitely tell that my data center business is going to grow bigger, and I have a huge appetite and ambitious targets with respect to.
So if it's 4 at the moment, what do you want to grow that to? What do you think the demand? Because that's ultimately going to come down to the AI usage in Turkey. So where can that go to? 4 to 8, and in what time frame? Just give me some parameters.
Of course. So the biggest problem with as you may know, that the data center business is the sustainable energy. So we need to figure out the first energy cost and sustainable energy sources. So that's the reason that after that you need to keep on growing on the data center numbers. So because of that, I am spending $240 million for 300 megawatts of solar energy farms in Turkey right now to provide a sustainable, renewable energy for my data centers. After it is over, I have more time and more appetite to invest more on the data centers.
The Turkcell CEO catching up with us yesterday. Coming up in the show, all eyes on the President Biden ahead of the NATO summit. That begins in Washington today. We'll break down Biden's effort to stop the infighting over his re-election campaign.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
The bottom line here is that we're not going anywhere. I am not going anywhere. I wouldn't be running if I didn't absolutely believe that I am the best candidate to beat Donald Trump in 2024.
That was President Biden insisting he is staying in the race and that he is the best possible candidate to beat the former President Donald Trump to the White House. Let's get to our Brussels bureau chief. It is Kevin Whitelaw. Kevin, thanks for joining us. I mean, first of all, we have this NATO gathering. Is the gathering overshadowed by the politics of the United Kingdom, of France, and of, let's say, miniature chaos in the Democratic Party? Is it being subsumed? What will the chat be?
Yeah, I mean, I think everyone's going to be watching first Joe Biden. They'll be looking to see, how he's doing, how his health looks, how he's coping. Obviously, some of these leaders saw him in France recently for the D-Day celebrations. They saw a few saw things that worried them. So I do think there's going to be, everyone's eyes are going to be on him. Obviously, Emmanuel Macron comes from France, politically wounded, although maybe not quite as wounded as everyone at first thought he was going to be, but still in a pretty precarious position. Chancellor Olaf Scholz still also weak himself. And obviously, the strongest leader is suddenly the UK Prime Minister. That's kind of a shift from where it's been for a while. And everyone's going to want to get their moment with Keir Starmer.
For sure. I mean, look, if anyone understands the idea of momentum, it is Joe Biden, both positive and negative. And right now, there's a lot of negative momentum that he's tried to quell. You have 6 Democrats come out and publicly say they think that he shouldn't be the candidate. You have him do a media blitz on talk shows, on the campaign trail, basically anywhere they can get Biden, saying, I'm not backing down. Now we have the progressives of the Democratic Party, like Alexandria Ocasio-Cortez, coming out and supporting Biden. So has he done enough? Or does it at least seem like there is some turn in momentum? Or is he still climbing a very steep hill?
I mean, I just don't see how he breaks out of this news sort of cycle, because at this point, every single moment he's out there, everyone's just essentially waiting for him to falter, waiting for him to fail in some fashion, and everyone's going to be looking for it and likely over-interpreting every little blip that comes out there. So, I mean, extremely hard for him to come out and do something that's going to sort of prove to one and all that he's actually just fine. And so it's going to be a long cycle for him with repeated attempts, repeated efforts, and repeated exposures to go out and show that that he's still fully with it and is really in control. Kind of hard to almost, we talk about often hard to prove a negative. In this case, it's actually going to be hard for him to prove the positive.
Well, look, for as long as there's chaos and infighting within the Democratic Party, and we've got ABC talking about a huddle of the Democrats this morning, that will happen at 9 a.m. And again, this is building on a video conference that Hakeem Jeffries coalesced on Sunday. So this is a building internal narrative within the Democratic Party. All Trump and the Republicans have got to do at the moment is do what they've done, which is remain relatively quiet. But of course, it's going to come down as well. Who does Trump pick as his vice president? And there are some names that are put out there as well. He's talking about a person that can do a fantastic job as president as well, and he hopes to announce it perhaps at the convention. So who's in the frame?
Well, you know, we're looking at a couple of different senators, J.D. Vance, Marco Rubio from Florida, a couple of, Doug Burgum, governors. So there's a handful of folks whose names are out there. I don't think anyone really knows what's in Trump's mind, and he does like to keep this kind of thing very close to the vest. Ultimately, it could well come down to simply sort of a gut pick for him. He's got to pick someone that he sort of trusts politically, but he's also going to want someone who's, not going to really overshadow him, because ultimately, for Donald Trump, everything starts and ends with him, and so he's got to find that balance. He likes to make a splash. He, for all we know, he's going to, pick the name out of a hat for a day or two beforehand, and not tell anyone. For all we know, it's going to be a surprise to the pick.
Love the idea of picking a vice president the same way you pick who's going to be your secret Santa for the holidays. Kevin, thank you so much. Bloomberg's Kevin Whitelaw in Brussels, who of course has had a long history covering DC as well. Okay, let's turn to the other politics in France. Lawmakers are preparing for negotiations over the next government. Tracking it is Bloomberg's Caroline Conan, who is in Paris. Caroline, it's quite surprising the scantness of what we've heard from President Macron. We really haven't heard a lot from him since the election. So what do we know about this debate, the horse trading that's happening behind the scenes of coalition building and the next prime minister?
Unlike Germany, France doesn't have at all this tradition of having a wide coalition. So that's something that is very difficult to picture politically in France. President Macron hasn't been seen, as you said, since Sunday's results. At the moment, you have 3 blocks in the National Assembly. He is likely to have to extend a hand to at least the center left in order to try and get some fragile majority in parliament. In the short term, he's asked Gabriel Attal, the current prime minister, to stay on to deal with current affairs. That could last for a few days, perhaps even a few weeks, given you have the Paris Olympics coming up on July 26th. So it would be kind of weird to change the government just a few days before, at least for security reasons, for continuity reasons. Now, in terms of who he could pick, you could have a few personalities from the center left. That's assuming that this alliance of the New Popular Front explodes and the far left is sidelined. You could see some personalities coming back, perhaps former President François Hollande, because you need someone who's experienced, who's skilled, who's consensual, and obviously you don't have that many of them on the left wing. A Green also would be a possibility. There is a Green leader. She's female. She's called Marine Tondelier. She's been named also as a possible prime minister, but you never know exactly where Macron is looking at, and some
so it's a broad field, Caroline, as you say, and the former prime minister himself, Gabriel Attal, he's coming up with things. He's talking about a broad political offering. It requires a bold move. Let's just talk about Marine Le Pen, and in terms of what she's pivoting towards. So she's looking much more broadly within Europe to galvanize her position. She might not accede to power in France, but she is pivoting to Matteo Salvini to join Orban's far-right EU alliance. So this is about building for the next 4 years for her, isn't it?
Of course, because she was using this as a springboard for 2027 presidential elections in France, unless, of course, those elections happen before that. And as you know, the National Rally suffered a big setback in this runoff, only 140 seats, when just a few days ago we were talking about an outright majority for the far right. So she waited for one day to go and see Viktor Orban and say, we're going to join this Patriots for Europe new group in the EU Parliament. In fact, the National Rally is going to become the biggest party within that that new group in the EU Parliament, along with Vox from Spain, along with Matteo Salvini, and clearly this is very different from Giorgia Meloni, who is from a different group in the EU Parliament.
Well, Caroline, it's the coalition of the unwilling. One could say this cohabitation could get very uncomfortable. Caroline Conan in Paris. Thank you for joining us. Context Matters on Bloomberg. Good morning from New York.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Let's get you set up for your trading day. Today, we're going to get numbers for small business optimism at 8 a.m. Eastern, so in just a few minutes. 10 a.m. Eastern, U.S. Treasury Secretary Yellen testifies to the House Financial Services Committee. Fed will deliver his semi-annual testimony to the Senate Banking Committee. And then at 9 a.m. Manus, we learned from ABC that the Democrats will be meeting behind closed doors. Will they have to check their cell phones? Just to give you an idea of the flavor of what the conversation will be about.
Yeah, that is going to be closed door, to say the least. And just to reflect on what Biden said, the party has spoken. The Democrat nominee is me.
Yeah, he's been really strong about that.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, you know, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really is not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. You need, this is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce half a gigaton, remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, you know, a year in terms of what we have to replace.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
growth has definitely turned a little bit the last month, and I think the key part of that is it's just gotten more broad.
We're not seeing a weakening, we're not seeing a contraction, but this is what drives the economy, and we are seeing a deceleration.
What we're seeing is signs that the consumer is slowing down.
When you look at last quarter's GDP, a little bit lower, a little bit below trend, I think this means we are going to start to see more slowing in GDP and overall spending.
There are key pockets of weakness. This is a lopsided economy.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance begins right now. Coming into Tuesday on a 5-day winning streak on the S&P 500. 35 all-time highs on the S&P so far in 2024. Chairman Powell taking center stage down in Washington, D.C. A little bit later on this morning. It is day one of his 2-day testimony.
At a time where people are wondering where the threshold, where the balance of risks is for him, I wonder how much the Fed has left the room. I wonder how much the market is moving ahead of the Fed, because whether they cut or whether they don't cut, how much is that the important message versus the actual weakening in the economy versus ongoing resilience? That, to me, at this point for markets, is the real question.
Are we being too cute by thinking about this? Will it be about the economy and not about President Biden and his leadership? Because it's a double-header today. It's not just the likes of Chairman Powell, it's Secretary Yellen on Capitol Hill as well.
That's right, and she's going to be the one that probably gets more questions about potentially the deterioration in the president's health that was on display at the debate. And the questions now are swirling, even from Democrats within the party, about whether or not he should step aside. Biden was out full front yesterday, defiant, digging in his heels. He did a call-in on Morning Joe. He wrote a letter to congressional Democrats. He got on the phone with the donors, and then at night, he had the Congressional Black Caucus held a meeting with them. He is shoring up the Democratic Party that at this point in a campaign should be firmly behind him.
Well, whether he is shoring it up will be the key question, and we can analyze Defiant Joe and for the rest of the show. But just to put these two ideas together, the idea of the Federal Reserve and how it responds to some of this political pressure. Peter Scheer coming on the show later today saying, I physically wince at the thought of the first rate cut in September, stocks soaring 5%, literally all hell breaking loose on social media, as it is portrayed as helping the incumbents, how that political risk really calls into question the likelihood of a September rate cut.
We can sit on the economy just for one beat longer. We might as well.
Thank you.
That's what we're here for. Chairman Powell last week said something quite interesting. This was the quote. Because the US economy is strong and the labor market is strong, we have the ability to take our time and get this right. And then we got some jobs data a little bit later in the week. We had an ISM services print. I just wonder how much time he thinks they actually have, how strong he thinks this labor market is. And I think the update, that assessment today is probably going to be the important one.
100%. Do you think he's going to give it?
I think he's got to.
Well, here's the issue. If he says the exact same thing, my question is, do you think that people are going to believe him? Or basically, is he trying to keep all options on the table for things to move aside? The reason why I ask that question is because I would love it if he comes out and he says, the balance is shifting. The issue is he hasn't wanted to say anything conclusive whatsoever. Whether he can help himself, I guess, is the key question.
And when it comes to Jay Powell, it is going to be highly political. This is what Rep. Andy Barr had to say, telling reporters yesterday evening. I want Powell to reiterate that the Fed's monetary policy trajectory is going to be data dependent and not political. And he was talking about this September rate hike, this whole debate the market is having. What Rep. Barr is saying, and he's the House Financial Services, he's on the committee, he said, quote, it will not be perceived as apolitical. It's gotten very tense in terms of whether or not the Fed cuts in September. It's becoming more intense on Capitol Hill if that's going to be seen political, given the dire straits the president's in.
Chairman Powell, just around the corner. Let's start with equity futures and the scores this morning. Equity futures on the S&P 500 positive by 0.2%. Make it day 6, and we will equal the longest winning streak, daily winning streak of the year so far in the S&P 500. In the bond market, just about unchanged on 10s, 428.42. Lisa focused on one thing, tons of supply coming out a little bit later.
Yeah, we're going to have a 3-year auction today. We've got later this week, we've got 10 years and 30 years. A question I'm going to have is, how much do you see some of the fears that we saw previously giving sort of a floor to how much longer-term treasuries can rally? Do we see that floor start to ebb away and actually demand coming back as growth concerns, to your point earlier, really come back to the fore?
Yields just about unchanged on a 10-year. This is the lineup this morning. For the next hour or so, we'll catch up with George Concalves of MUFG, with US stocks reaching fresh record highs. Sarah Bianchi of Evercore as President Joe Biden refuses to end his campaign, and Kelsey Barrow of JP Morgan saying risks are rising for the labor market. We begin with our top story, the S&P 500 reaching its 35th record high of the year. George Concalves of MUFG says now comes the hard part. US markets, especially a narrow set of stocks in the equity space, have moved from pricing in perfection to the euphoria phase of the risk bubble. Eventually there will be an exhaustion point that sees assets return back to earth. George joins us around the table. So, George, good morning, first of all.
Good morning.
And second of all, the first question. You're expecting a difficult second half. What's bringing that about?
Well, the first half itself has been proven to be much softer and weaker, and has been decelerating all throughout the last few weeks, few months. And I think that that's setting up the stage for a really challenging summer and into the fall. We have this very highly contentious election to go through. And think about like the setup that we're coming in at the highs for risk markets. We have earnings season ahead of us, and we have the kind of the doldrums of summer, right? We have a few key macro event weeks. We have this week, we have the end of this month, and then we have Jackson Hole. In between that time period, there's very low conviction in the market. Look at the way the VIX is. Like, that's setting up for an environment of difficulty when we get into the throes of the election, number one. And number two, like, you know, which corporates are going to be really embarking on new R&D projects, capital projects? They borrowed all this money at the beginning of the year. They've done their hiring, probably overhired in my opinion. And so now we're into the phase where there might be a pullback on actual hiring and maybe layoffs into the second half, and that will contract growth.
Neil Dunter of Renmax said the cost of doing nothing is coming up. It sounds like you agree.
Look, I think that the Fed should be easing. That's been my position for such a long time, that they should have been easing and being preemptive, but they're dragging their feet because they want to get the confidence on inflation. They might get it this week if we get a big catch-up on shelter inflation, but nonetheless, you know, it's going to be hard for the Fed to change their message until at least Jackson Hole, I think, and by then it might be too late. And the September cut really comes down to 25 basis points or 50. Remember, first cuts have been historically large when the Fed has actually made a policy mistake. And I think that they're in that potential window where they're actually creating a policy mistake the longer they wait.
This is the key question. What does too late mean? What is at stake? What kind of consequence could there be if they don't cut, as you believe they should, this month?
Well, so look, this month is going to be the path towards a July cut. And listen, I was one of the last holdouts on having a July cut as our base case, and we moved it after, you know, the hawkish rhetoric and the May NFP, which has been proven to have been revised lower. But nonetheless, I mean, it'll take a lot for the Fed to set us up for a July cut. It's not impossible, but it's really going to be setting us up for September, which takes us throughout the whole summer. And this can drag out, And as we're waiting, that uncertainty with markets at the highs, again, markets don't have to stay at the highs. I mean, I know we were running on 35, maybe 36 days of all-time highs, but it's been a grind, right? It's been a grind. It's been an unloved kind of like, hey, yes, markets keep going higher. Any sort of pullback in equities through September, the Fed can be much more aggressive.
When you said unloved, there's sort of a real kind of tension right now. Unloved versus euphoria, unloved versus bubble. So which is it? At a time where you have Citigroup saying it's time to book profits and AI high flyers, you've got Bank of America coming out talking about the fragility of tech stocks simply because of the huge swings that you're seeing on any kind of day-to-day volatility. How do you sort of understand euphoria with this sort of very uncomfortable rally that you see going on?
Yeah, I mean, look, so obviously these concentrated moves and these handful of names have really masked everything. But everyone looks at the indices. They don't just look at individual names. And the fact that equities are up so massively up until the middle of the year, that gives you that kind of confidence that maybe there's financial conditions easing. But we haven't really seen that pick up in sort of retail spending. And we haven't seen the translation of financial conditions translating into broader growth. So it's euphoria to the point where it's not. So the question that I think most people really ask me is, if we see like a retracement in tech stocks of 10, 20, 30%, will that change? Will that be much more damaging than the rally itself, right? So we've had a massive rally in all of these handful of names. Did that result in financial conditions easing, or was it too concentrated to not matter? And therefore, if they pull back and they bring the whole indices down, you'll focus on the indices more than the individual names. So it's kind of like this kind of a mixed sort of a performance message, but nonetheless, if we were to see those stocks no longer go up and actually pull back, then you can get an environment where people focus on the indices, not the individual names, and say, oh, it's just because of these handful of names that they pulled back.
Are you saying that basically if you do see a 10% pullback, that Fed Chair Jay Powell has the green light to cut rates?
I think he has the green light to cut rates given the sort of data that we're getting on the jobs front. We've been getting it for the last 2-3 months. And it continues to be mixed, continues to get revised lower, and I think it's going to get worse from here on out until September. So I think that the hiring plans, as I said earlier, are going to stall, and you're going to get into that tough environment before the election. So, I mean, I don't think that this idea that the Fed's being political is true. They're going to do what's right for the economy, and if that requires a larger cut to start off the process, they'll do it.
But right now, the President of the United States, who's the presumptive nominee, is in a very vulnerable position. Doesn't this make September that much harder for this Fed?
I don't think so. I mean, I think that, in fact, actually going and doing what's right for the economy proves that they are obviously not being driven by the political sort of winds. So I think that this idea that they have to hold off until November, until after the election, then you're really ensuring a much more, not a harder landing, but your chances of soft landing really decrease the longer you wait.
Can we get some trades from you? What are we looking for? Bull flattening, wider spreads, credit? What are you looking to do in treasuries?
So this is the challenge. We've had the inverted curve for over now 2 years running, roughly, on the 2s10s curve. It's been the most difficult trade to maintain, but the curve trade is the right trade, because ultimately, if the Fed can fix this really quickly. They can go much faster than what's priced into the forward curve. And so we do think that the curve steepener is the right trade. And as we're waiting and we get into this period of realizing that earnings are not going to be that robust, and that the Fed ultimately will be like a bridge loan between now and the next administration, whichever one that is. So if the Fed's the bridge loan, they have to cut at least 100, 150. And then we'll see what sort of policy measures get implemented by either, whoever wins, right?
I'm just listening to the words you're using. They could, they should, they have to. Will?
Well, the will come when they start realizing even the revisions become much more dominant. We get into the September-October time period, and we realize that the economy has decelerated, and they'll be completely agnostic to the political backdrop. They're going to be focused on, we don't want to have this thing unravel.
George Goncalves, good to see you, of MUFG. Great to catch up. Looking ahead to Chairman Powell Day 1, another name on a long list of names that have joined this program saying they should, they have to, will they do something soon?
That's the reason why it'll be interesting to see whether the balance of risks has shifted more materially for Fed Chair Jay Powell. That said, right now, priced into the futures markets, doesn't look like they will, certainly not in July.
Equity futures this morning, just a little bit positive. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. United Airlines says another of its Boeing aircrafts has lost a main landing gear wheel while taking off Monday from L.A. No one was injured on the flight, which went on to land safely in Denver. The incident is similar to one aboard a United flight in March, which helped trigger a federal safety review of the carrier. Nike is bringing back a retired executive to try to revive its slumping sales. According to a memo obtained by Bloomberg, 30-year veteran executive Tom Petty is returning as Nike's vice president of marketplace partners. He left the sportswear giant back in 2020. Nike is trying to rebuild relationships with retailers like Foot Locker after pulling products from many stores in favor of its own shops, e-commerce, and apps. The company's stock has declined 33% this year through Monday, with sales continuing to fall. And after 134 days of pre-celebrations, Arnott Ambani, the youngest son of Asia's richest person, is set to tie the knot this week. Celebrations began in March, and they featured performances by Rihanna, visits to the family's personal zoo, and a luxury cruise from Palmero to Portofino in May. The family had also held a mass wedding for 50 underprivileged couples last week and a musical event with Justin Bieber as the headliner. Sources familiar told Bloomberg that the guest list for this Friday's nuptials include Hillary Clinton, Boris Johnson, among the 1,200 people expected to attend. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the White House comes out swinging.
So I am telling you that he has seen a neurologist 3 times while he has been in this presidency. That's what I'm saying. I am telling you that he has seen them 3 times. That is what I'm sharing with you. Right? So every time he has a physical, he has had to see a neurologist. So that is answering that question.
Kinda. That conversation up next. Live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Equity futures on the S&P 500 positive by 0.25%. Yields are higher by a basis point. 10-year 428.81. Under surveillance this morning, the White House comes out swinging.
So I am telling you that he has seen a neurologist 3 times while he has been in this presidency. That's what I'm saying. I am telling you that he has seen them 3 times. That is what I'm sharing with you, right? So every time he has a physical, he has had to see a neurologist. So That is answering that question. Guys,
unless the White House answers the
hold on
question.
a second. There's no reason to go back and forth with me in this aggressive way. Every time I come back and I answer the question that you guys asked.
Correctly, then have to come back and clean it
I
up
never
the next
answered the question incorrectly. That is not true.
It's like kindergarten at the White House. My new favorite phrase, let's take a step back. How many times do you hear that? Let's take a step back. Let's take a step back. Here's the latest. We'll take a step back. The Biden administration trying to quell concerns after visitor logs showed a neurologist specializing in Parkinson's disease visited the White House 8 times over the past year. This coming after the president said he's staying in the race. Sarah Bianchi of Evercore outlining 3 reasons why she doesn't think Biden will back down. It's his decision to make. It would take an extremely strong push from his party to change his mind. And if he survives this week, attention shifts back to Republicans and the RNC. Sarah joins us now for more. So, Sarah, we understand your base case. What would change your mind?
Well, I'm watching a couple of things. One, I'm watching to see the meetings on the Hill today. They are finally really back and able to have conversations with each other to decide what they think should happen. And I'm watching in particular the leadership, not only Leader Schumer on the Democratic side and Hakeem Jeffries, but also Pelosi and Clyburn, who are very, very close to Biden. And then let's keep an eye on those senators and House members who are up in very, very vulnerable races. What are they saying? What is Bob Casey in Pennsylvania saying? Those are the voices that are going to be the strongest. And if they unite, and they will have to at this point, then they are going to, have a president who's a little bit more willing to listen to the perspective than he is right now. The second thing that I'm watching is the polls. We have not seen lots of state polls coming out. We should get some more this week. That will also be informative.
But Sarah, when it comes to the polls, the president yesterday, when he was on Morning Joe, talked about the fact that the majority of Democrats want to see him. But the polls going back a year now showed that most of these individuals, the American electorate, including Democrats, think he is too old. So how does he square this circle of the Democrats want me there, but all the polls for months have been showing actually they think he's too old to carry the torch?
Well, I think the point that he was making in that context was leadership, the leaders in the party. But look, your point is right. He has a really big challenge. It's hard to see the path right now for the president, given that he is down in some of the key states like Georgia, Nevada, and Arizona, almost seem out of reach for him at this point. And Michigan, Pennsylvania, and Wisconsin, he would have to have a 3-for-3 sweep. And that is difficult, too. So you're right, the voters have been sending a message. But this president's perspective is that he's been counted out before and that he is the best one to take the case to the folks. And whether or not Democrats agree with that privately, they're going to have to mount quite an effort to change his perspective.
If he were to step aside, how do you view this playing out? Does it immediately go to the vice president?
It doesn't immediately go. He has to release, the president would have to release his delegates, and then there would be an open process in some sense to figure out who that nominee would be. That would happen at the convention, and somebody would have to get a majority of the delegates. I think what people are saying that's right is that that process does favor Vice President Harris. She is more popular with that set of delegates than she is in the country across the board. There is a lot of women of color in that delegate group. There's a lot of people who care about choice, where she's been very active. So it does favor her. She is vetted. But there is certainly an opportunity for somebody else to get in. Part of what would matter is how Biden would frame it if he were to get out of the race. Would he and Obama and others really signal that they really want delegates to go that direction? Or would they say, you know what, this is really a time for our party to decide? Those are things I'd be watching for to decide how big Vice President Harris's advantage would be.
Sarah, there are so many double haters. There's so many people who are disenfranchised from the current system based on the fact that a lot of people don't like either option at this current point. Do you think that it basically undermines Joe Biden's argument when he basically says, get behind me or get out, and there's sort of this feeling that you need to coalesce around him and not speak publicly what you think privately, which has been the reason why there was such an outrage from the debate in the first place?
The president's trying quite vigorously. And by the way, I am surprised it took him as long as it did to really put up the fight that we've seen since Friday. That was really more than a week after the debate performance. So I think potentially he could have stemmed a bit more of this if he had got going a little bit early. That being said, his point is quite clear, which is he has won the delegates, the overwhelming portion. He has been through a process. And so I think he is trying to turn the page on this episode to tell people to move on or to challenge him at the convention. I think my sense of it is that if he makes it through this week and the conversation actually changes to the Republican convention, maybe to NATO in the week, then he's going to be in safer ground. And those who want him to step aside probably need to put together an organized effort, really starting today and this week to make that case, because certainly over the weekend he has come out swinging, as you mentioned, calling into Morning Joe, doing a range of events, and doing what this president does when his backup is against the wall, and that is to fire up a bit and press on.
Sarah, I'm glad you mentioned NATO. It feels like lame duck NATO, where you have Emmanuel Macron meeting with Joe Biden to talk about policy at a time where neither of them have particular domestic strength. How much is that going to be on display in a way that can't really be positive, given how much confidence can you get from any resolution they come to, given they're all facing some really big challenges at home?
It's a great point. There are so many elections globally this year, not just in the United States and France, but across the board. And it's always challenging to govern in these kinds of really disruptive periods. That being said, there's a lot of issues on the board for NATO in and around Ukraine. And to the degree that voters think about this, certainly Biden has a different approach to addressing world leaders than we've seen with President Trump. He is a bigger believer in multilateral institutions. So he's going to try and use this opportunity to remind people why they should want him in charge. Again, very difficult to do on foreign policy issues, but you're right. It is a challenging time. And certainly when I travel around the world, leaders there are very focused on the United States election as well. And trying to plan for what their future might look like, no matter what happens in November.
Sarah, it's good to hear from you. Sarah Bianchi there of Evercore. We all know where the noise is. Let's talk about where the quiet is right now, and that's the VP pick of Donald Trump. And there's two reasons for that. One is obvious and one is less obvious. The obvious point is that he doesn't want to be in the news cycle right now, wants to keep Biden firmly front and center. The less obvious one is how what happens with Biden dictates or shapes his VP pick in the coming week. And I think that's the point here that maybe needs to be explored a little bit more.
He insinuated that last night when he called in to Sean Hannity on Fox, and he said, I have to have my VP pick. I know I need it for the convention. He said, I'd love to do it during the convention because that'll be exciting. But he also said, I'd love to see what's going on with the Biden camp because that could change things, but didn't elaborate on that. But potentially would that mean, does he need to pick someone from the African-American community? Does he need to potentially pick a woman?
What are these phone interviews about? You get a script and you can sit there and read it? Is that what it's about?
You do it in your pajamas.
Oh, right. You don't
That's
get
the
changed.
reason why.
Ah, okay.
Yeah, no bronzer. You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera. And I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
5 days of gains on the S&P 500. Looks like we might make it day 6. We're positive by 0.2% on the S&P. On the Nasdaq, up by 1/3%. You all know the number by now. It's, what is it, Lisa? 35? 35 all-time highs on the S&P 500. So far in 2024.
Yeah, although the nature of it is shifting a little bit. As much as it is led by the NASDAQ, yesterday we saw outperformance by the Russell 2000, and you have a growing number of strategists saying maybe things have gotten a little over their skis with valuations with artificial intelligence-related names. That's the sort of shift that I'm very curious about, the sort of de facto broadening out simply because there's nothing left.
Is that a shift, or have we heard that the whole way up?
Well, we have heard it the whole way up, but we haven't necessarily seen it put into practice. And it comes at a time where it's not necessarily driven by bond yields. And I think that that's of note. It's also not driven by anything because essentially there's not a lot going on. I will just say that the NFIB, Small Business Optimism Index, did come out earlier this morning, and it came out at its highest level this year.
Let's turn the page to the bond market and talk about the 2-year. The 2-year yield inching higher after dropping for 3 consecutive days, inching higher yesterday and then again this morning. So 2 days of this now, up by about a basis point on a 10-year, just about unchanged at the front end now. At the front end of the curve on a 2-year at 462.85. Going into Chairman Powell, we have to sit on what inspired that bond market rally of last week. And that was the weak economic data and how responsive Chairman Powell will be to that going into the Fed decision later this month.
He has a tendency to want to be dovish. Does he really deep into his dovish soul and come out and deliver some sort of message that this should change the script? The problem with this is that the data is what you want it to be, and it continues to be that way. On a headline number, we've seen something like 42 straight consecutive months of job creation, of positive job growth. We've seen a lot of positive sort of signs in the economy and disinflation. No signs that are screaming huge issues, at least not to most people, take it in aggregate. You can tell your own story, so it's going to be interesting to see what he emphasizes, because then he'll be taking a view at a time when a lot of people are, you know, kind of arguing on one side or another using the exact same data.
You can see why people are split, though. You can identify rising unemployment, and at the same time, someone else can say, but on a historical basis, we're still very, very low, in the low 4s. Is Chairman Powell in camp 1 or camp 2? Based on recent comments we've had from the Fed chairman, it sounds like he's in the latter and not the former.
Because